Welcome everyone. My name is John Chung. We're about to get down to business now. But before we do, I want to take a minute to thank our esteemed, hardworking members of the Cannabis Banking Working Group. To give you context, each of the members of this group have made and contributed over the past 8 months. They did not hesitate to answer the call, knowing that they were taking on a big, complex, and difficult issue. They've gone up close and personal, sometimes graphic and painful public safety issues endured by the cannabis businesses. And they've been have willingly traveled throughout the grapple of thorny regulatory worries that ensnare our financial services sector in search of a way forward. They have done this for the sake of California voters who voted to legalize the commercial sale of cannabis because they recognize there is a need for people with expertise and abilities to act as midwives to the birth of this new industry. They have given their time, intellect, and insights, and I have no doubt that is because their involvement and their references that they contribute to a venture that has drawn broad and deep participation of the public we have seen in city after city in which we have held public meetings. I would like those of you who are viewing this program and those of you who are generous enough to give your time to be here to know who the members of the working group are. So Alex Allies, who's Vice President of Government Relations for the California Bankers Association. Alex. David Hickok, Executive Director of the Cannabis Banking Network and Senior Staff Member of the Independent Community Bankers of America. Courtney Jensen, Vice President of State Government Affairs for the California and Nevada Credit Union Leagues. Fiona Ma, Chairperson of the California State Board of Equalization. Patrick Henning, Director of the California Employment Development Department. Selby Stanislaus, Executive Officer of the California Franchise Tax Board. Janlyn Owen, Commissioner of the Department of Business Oversight. Okay, on our way, thank you. Lori Ajax, Chief of the Bureau of Medical Cannabis Regulation. Thank you, Lori. Peter Williams, Deputy Secretary and General Counsel for the Business, Consumer Services, and Housing Agency. Ben Glickman from the Attorney General's Office. Hezekiah Allen, Executive Director of the California Growers Association. Gurjeet Koja, Board Member of California Cannabis Industry. Nicole Howell-Newbert, very active member, founding partner of the law firm of Clark Newbert. Matt Cate, who is sick, couldn't join us, but he's the Executive Director of the California State Association of Counties. Carolyn Coleman, Executive Director of the League of California Cities. And Dave Jones, our California Insurance Commissioner. I am, and I think we all are in your debt. Thank you very much for your terrific service. Today, the end of the road is approaching for us. At least we have this in regards to our public meetings dedicated to fact-gathering our concern. We began in December in Sacramento, wending our way through Los Angeles, Oakland, Santa Rosa, San Diego, and now here we are today back in Los Angeles. And after today, we have one more meeting to follow. When next we meet, it will be in fall, and we will be meeting to review the report on our findings. We will gather into the form of that final report the information, suggestions, concerns, comments, and best practices we have gathered over the course of these past 8 months. I know you will agree that we have learned a lot. We learned what we did not know, but thought we knew. We've been learning what we can and cannot do. Today's presentations will focus on public banks and variations of them. Suddenly, everybody seems to be talking about public banks. It is an idea that is getting a lot of attention at this moment. There are many reasons why. For one, there's a deep public dissatisfaction with our private banking system. The dissatisfaction in part can be traced to the economic havoc wreaked by the Wall Street banks in 2008, triggering the Great Recession. And more recently, there has been the Wells Fargo debacle, in which millions of customers had bogus accounts set up in their names. Then there was the LIBOR manipulation scandal, and so on. The banking problem facing the cannabis industry in California and across the nation is driving the wave of potential the idea of public banks is now receiving. The emergence of the emergence of a multi-billion-dollar cannabis industry could well be the catalyst that vaults public banking into becoming a reality. We are here to test and discuss the idea to see if it's truly workable. Is there something really there, or is it a page? Tasty to eat, but ultimately not much nutritional value. We're going to have that discussion. The public bank solution to the cannabis banking conundrum poses some incredibly complex implementation issues. Today's speakers will help us better understand the concept of public banks. We will hear from both ardent supporters and thoughtful critics. Before inviting our first panel to get us started, I think it may be helpful to address our expectations. As the chair and convener of this group, I have tried to provide a reset for our collective expectations from time to time. This is a process and not an event. Some people may be frustrated by our inability to provide a magic bullet, but the fact that the magic bullet is not in state government's possession is not preventing us from identifying potential pathways to making the start of commercial sales this January as smooth a process as possible from a banking and commercial standpoint. The magic bullet is federal action removing cannabis from the Schedule I list of illegal drugs, which would automatically open the door for cannabis businesses to enjoy the benefits of financial services already enjoyed by every other business in this state. We have achieved a lot already. In my view, we brought clarity and discipline to much needed public inquiry into the issues bedeviling the cannabis and banking industries. The simple process of publicizing this problem and shedding light on the multiple pathways to possible solutions has been helpful to the businesses and people involved on all sides of this issue. With that, I would like to begin the first of the 4 panels of experts we are fortunate to have with us today. On the first panel, panel A, we'll bring up Kevin Clouden, Executive Director, California Center, and Managing Economist of the Building Institute. Kevin, welcome. And with the permission of my fellow working group members, I would like to ask the first question, so to frame some of your thoughts. It's actually a 2-part question. The major question that I think will cover over all of us as we pursue our topic today. In banking, short-term liquid deposits are used to create long-term, less liquid loans. This is the primary job of a bank. It is how a bank makes money. So my first question is, how would a public bank make money in California? And my second question is this: traditional banks are avoiding cannabis money for fear of federal action. How would a public bank be exempt from, say, seizures of assets associated with loans from the cannabis industry? And I know you're going to provide context of the history of public banks, so feel free to answer the questions within that framework of everything else that you wanted to present and share with all of us.
Thank you very much, Mr. Treasurer, and thank you very much, everyone, for the chance to.
Thank you very much, Mr. Treasurer. Thank you very much to everyone for the chance to speak here today, and thanks to Tim Schaefer for reminding me there's an online. So the answer is that a public bank historically has been, if you look at the traditional models of public banks, the most successful model of turning short-term liquid deposits into long-term loans is actually the postal bank. That once upon a time, for those of you who are not aware, the United States actually had a postal bank. We actually had one for over 50 years, from about 1911 to 1964. That being said, the models that everybody tends to draw on for most effective cases are Japan and Germany. The Japanese postal bank is essentially, has even been described as being akin to a second GDP source. It's so massive, the amount of, given the savings rate in Japan, given the total amount of money that's available in the system, what it's done is that it's created a system where the public actually trusts the postal bank, the convenience of the postal bank, the overall reliability of being able to always get your money from a postal bank, and the view that the postal bank is a trusted institution so thoroughly that it is the single largest depository institution for individual deposits. There are obviously, Japan has been home to some of the largest business-oriented banks in the world, But the postal bank is allowed fundamentally for a whole series of loans to be utilized, that a fiscal investment loan program that actually that program by 2001 had 400 trillion yen in it. So equivalent to 82% of Japan's GDP. If you take the current exchange rate right now, just as an approximation, that's still about $4 trillion. So just think about just how massive that actually is. Now, we're not talking, even with California, given the size of California's overall economy, one can expect that you're going to have a savings rate, the amount of money that's going to go into a program like that. But what it does is that, what's worked for the postal bank is that both as a public bank, now it's transitioned to be a private autonomous bank. It's still got government oversight, but it's actually operating as a private bank now. What it's done is it's created the ability for the Japanese over the years to have a ready source for different kinds of personal loans. As the ultra-low interest in those ultra-low environment and inflation that's been going on in Japan, and yet people keep their money there. It's so thoroughly trusted, and so to be able to make that bank is being able to make money in a near zero interest environment, and has been able to function and add to the Japanese economy. What goes on in terms of the idea of a depository bank from California? Whether you do the Japanese model or you do the German model, which was also a public bank, but is now 30% privatized, 30% is actually in graduation time, is that it's a matter of creating an identity, a trust with the public, and people treating it as an incredibly convenient, easy institution. The Germans do a whole lot, and have been for years, a whole bunch of telephone and internet banking, where it's not just about going to the post office. A huge percentage of the activity that goes on, people don't actually go to the post office. So you don't necessarily have to create a massive traditional depository infrastructure with lots and lots of different branches in every location. It does help. It helps to some degree in terms of identity, but the amount of money building that up doesn't necessarily preclude the ability to create a public bank. And certainly one that's catered towards small businesses and individuals. Now, just to mention something in regards to the question of how you handle marijuana deposits, that gets a little more complicated. I'm sure as you know, and we'll hear a bit from later from experiences in Colorado, is that as long as marijuana remains a Schedule I drug, the fundamental thing that you need to do in any public banking structuring it is you have to firewall it off. You have to create a separate section, fundamentally, that is dedicated only for in-state engagement and in-state operations. Now, it is possible to create a state charter and to create two separate elements of the same institution. You have to create a transparency provision so that the federal government right now, the FDIC, and the access to the Federal Reserve System is fundamentally dependent on the need for any money that goes on in the system to, if it's transferred to the Federal Reserve or otherwise through that system, it's open through interstate transactions so that the Fed has to approve it. And if there's Schedule I drug money, and they believe Schedule I drug money going on, then they can prohibit those transactions. And that is a big deal. As the Treasurer said, is that Schedule I goes away. That's wonderful. There are a large number of people in Congress who would like to see that change. The catch is right now that you happen to have an Attorney General who is very, very public whether or not that is true, it does reflect the fact that people believe it may be, reflects the fact that the Attorney General is not likely to change his views otherwise, unless Congress does. And that is an important distinction to be made. But it does mean that any federal agency, and I have run into numerous discussions of this, who is always going to be concerned about the enforcement by the U.S. Attorney's Office, by anybody connected to that, as long as on any interstate transactions. So you have to create that separation. I am a very strong proponent of the idea of a public bank. I believe that I can talk a little more in a moment on that, but it is essential to look at it in terms of how you structure things, both for marijuana money and for other uses of the public bank. And that one of the things that looking at the public bank model can do in terms of marijuana money is that there's a way to create a depository institution that is explicitly focused around both business deposits and individual deposits, where you sole proprietorships, where you put the money into essentially a state chartered firewall element that is dedicated explicitly to the marijuana business. What you do in that situation is that you create a circumstance where this money, in many ways, what you're trying to do is create a safe alternative to an all-cash operation. And the model that you can use fundamentally in a public bank, which is taking small and medium-sized deposits and turning them into targeted loans to make money off of those targeted loans, still applies. It's just that separation is necessary because the standard public bank, if you want to operate it, has to be able to work if you want to attract consumers and normal businesses and ease of operation. They have to be able to operate in terms of being able to access the interstate banking system, and it has to be able to operate in terms of being able to function in terms of being able to withdraw money anywhere in the world, or at least certainly in the United States, people have checks there, except elsewhere. A state charter bank, which is a state marijuana bank, if you're going to do this firewall element, can certainly be a model where you set things up so that you accept is very important is that for those of you who ever go ahead and look on a check, if you ever look on your check, you'll have two numbers at the bottom of the check. You have your account number and you have the routing number. One of the key things that you have to, this is something very simple, is that when you have a routing number, it is identifying the source of funds and where those monies are coming from and how they're going to be handled. A routing number is very significant for any kind of electronic transactions, speeding up how you handle any kind of checks, any kind of identification. And one of the key things with federal oversight is that if you're dealing with federal oversight, both the Federal Reserve, the FDIC, the Deposit Insurance Corporation, and various other national measures, what is significant there is that they have the ability to look at any of these transactions and to approve any of these transactions to any entity engaging in them. And they say, okay, if this money is coming from an institution that we have flagged as suspect because they're doing what they would consider to be money laundering, and yes, as far as the federal government is concerned, that they could interpret that any money from a marijuana business that is being put into the system legitimately, what is viewed in the laws of the state of California as legitimate business, as far as the federal government is concerned, is still illegal drug money. And so they can block the transaction theoretically, they can investigate and seize that money in an interstate transaction. And we want to create a situation where they are not going to suspect or otherwise attempt to interfere with any transactions that are generated by a public bank that is concerned primarily with standard individual deposits and other kinds of small business deposits from non-marijuana related businesses, so that those monies are not going to be held up, seized, or otherwise impeded from engaging in interstate transactions and commerce. That's what you need to make clear, which means that you need to have even if you could create one public oversight company on the whole, that the transactions, the structures, the deposits must fundamentally be separated in terms of their identity and not commingled. You want to create a very clear legal distinction and a transactional operational distinction that the money is separated between the two elements of any chartered public bank. They, for all intents and purposes, even if the state uses similar people to operate them, even if they're created under the same act, you have to put a situation in where the federal government is concerned, they might as well be independent entities. Now, a number of banks have created separate independently chartered operations for different activities. And I'm very familiar, for example, with a bank in Baltimore where it's one of the main local business lenders called Harbor Bank. But Harbor Bank specifically was in a situation where they wanted to get involved in community banking. And they created a CDFI, Community Development Financial Institution, which even though it's owned by the holding company, is treated as a completely separate entity with different legal standing and different applications that are applied to it that govern CDFIs and how CDFIs handle things and how they operate. I mean, that's just one example because I'm very familiar with the people who operate it and how they structured it. But what's important is to get the federal government to recognize that they are operating as separate entities, even if their fundamental purposes are similar, even if they are created under the same act or have the potentially similar oversight structures with shared individuals. A public bank, in terms of how it works, whether you look at the classic example, which is the North Dakota Public Bank, or it's worth noting that there is by the definition of a broader umbrella public bank, we have a bank in California in terms of the state infrastructure bank, which covers several functions that North Dakota functions. Actually, the California State Infrastructure Bank is set up, it has a business loan program, it has the ability to actually do some agricultural loans, its primary purpose is infrastructure funding. That being said, it's fundamentally limited in terms of its total available funds and how it operates. And most importantly, the infrastructure bank is not in its charter a depository institution. And that's really where it's important, is that the ability to actually generate the business, whether you look at the California infrastructure bank, you look at the new Canadian infrastructure bank that's being set up, you look at the broader international infrastructure bank, most of them are not set up that way. Now, there was a proposal for a broader U.S. infrastructure bank that was put forth, and it was actually put forth and considered under the Obama administration. His initial proposal was actually going all the way back to the Bush administration, but it never happened. And if you look at various other infrastructure banks and funds that are set up, the fundamental nature of how it's supposed to operate, which is primary purpose, is a set amount of funds being made available by the state. The state is providing funding, or in the case of California, where a lot of small business money is coming from the federal allocation of funds, it's not coming from the private sector. What we want to do in a situation where you are setting up a public bank to handle marijuana money and a public bank to handle other broader public good and to be available to the public as a depository institution is you need that. You need to have deposits. And the key thing that you're doing in this situation in structuring it is that you're trying to set up so that it is a trusted actor. That you want to have it so that if people are engaging in putting their money in a public bank, that they view it as a favorable location that they can put their money in. And one of the other important distinctions that comes in terms of public banks is that most public banks, whether it's an industrial bank, which is a bank that's primarily made for business and industrial targeted lending, such as Utah, and California technically has an industrial bank as an industrial loan corporation, and some of the industrial loan actually goes under the infrastructure bank. But even though the industrial bank is not classified under the federal categories of the bank.
Can I interject here? I'm not sure everybody has the level of banking expertise. We're talking about different characteristics of different types of banks. Can you explain what an industrial bank is to folks, right? If you reference the Bank of North Dakota, if you want to go back and set a historical context for the operation of the Bank of North Dakota so the people can understand the various functions of various banks.
Okay. So the North Dakota, it was a state-owned bank that essentially is the only one right now fully of its kind in the United States, which is a completely independent, fully operational state-owned bank. It was created more than 100 years ago originally with the fact that the farmers of North Dakota felt like they had nowhere they trusted to both put their money and to get agricultural loans that they felt like would not be called, where the money would not be called due under unfair terms or otherwise set up so that people would, that they would be stuck having to repay the loan on short notice, to have their terms changed. It basically felt like there were the banking institutions that were providing most of the money in North Dakota at the time were not either trustworthy or consistent, let alone fair. North Dakota, like, has expanded the mandate of it, so its bank, so that it's particularly set up so that in order to capitalize the bank, the state and all their state-related entities actually had to put their money in the bank. What this meant was that the state isn't paying money to any external entities. It's not paying fee transaction fees. It's getting, if there is interest that was generated, that money obviously would stay in. And if any money that was paid out from the loans generated by the Bank of North Dakota, those profits would stay within the state. And it's in some ways that it actually does functions that are like a bank sort of central bank in terms of it will do check clearing, they'll do certain aspects the Federal Reserve does. It's the catch is, and this is what's really important about North Dakota, and this is what's important about setting up a public bank in California. The deposits are not insured by the Federal Deposit Insurance Corporation. They're actually insured by the state. And why this is important, this is actually something I was going to bring up in talking about the structures of a marijuana bank, is that ensuring the deposits is a key element of creating a trusted institution. You do not underlying laws regarding marijuana fundamentally prevent that. And this, you have to recognize that the state must ensure these accounts. That's part of what makes it a trusted institution. That being said, is that, that given the fact that you're concerned about risk and risk mitigation, the key thing is that North Dakota has consistently found that because they control the institution, because of the fact that they also insure the institution, because of the structure of it, their default rate has been very low. They consistently remain effective and profitable. And the ability, the fact is that they've got a management commission that runs the bank called the North Dakota Industrial Commission. That's the governor, attorney general, and the agricultural commissioner, going back to its origins as an ag bank. But the people who run and operate the bank specifically operate in the model of, they've operated in the model of a standard bank. It is meant to be competitive in terms of trying to generate and attract business within North Dakota. It's also worth noting, even though the idea of making it a credit union, where it's, it's some sort of institution where it's essentially owned by its members was considered, it is not a credit union. It is a state-owned and operating bank, and that is an important thing to keep in mind. There is only one other particular, other than these other models, is the infrastructure bank, which is a bank that is a non-depository institution, which, including California, there are 7 in the United States, one's in Canada, there's a national one in Canada, and various other efforts, where that bank is non-depository, which is why we're not considering it. It's a targeted bank specifically focused on initially infrastructure investments, creating loans to communities to build up infrastructure, which is something that a public bank can absolutely do. There is nothing stopping from engaging, from attracting deposits from cities, where cities can put more of their money into the public bank, and then specifically, create a target where the money is being pulled together that is coming from city deposits that are going right now to local privately owned banks could be put in specifically targeted towards this aspect. Florida created a different model where they actually created for loans to address a specific area called the Florida Export Finance Corporation. It's actually created back in 1993. It just won an award from the Export-Import Bank for export financing. That's what it does. It gives loans to small businesses so they can have the money to cover setting up and exporting goods outside of the state, outside of the country to new markets. That's actually something that can also be done. It's a model that's been established when we talk about the idea of growing the state economy and engaging in export financing, which is something that right now is only done in the U.S., either in Florida or at the national level, the Export-Import Bank works done privately. It becomes another category to do it. I'm not talking, however, about exporting marijuana. I think that you still want to sort elements and restrictions. But there's nothing that says that if you had a finished product with marijuana and within the provisions of the marijuana public bank, that the kinds of loans that you could create following this public model is that in addition to standard business loans, which is something that the North Dakota Bank does, it's something that bankers banks, industrial bankers banks that give money to community banks, where they're set up specifically to fund and to give money to community institutions that otherwise can't offer water services, help fund them, or to what we call, like mentioned, an industrial bank, which is specifically a bank set up to give money to businesses. It's entirely set up with funds for that purposes. Once again, it's not a non-standard depository institution, but it's designed to specifically grow industrial sectors within the state. If you look at the Utah Industrial Bank, which is the most successful example of an industrial bank in the U.S., the Utah Bank has been specifically used in the same fashion that we saw the Japanese use their coastal bank, which is to take monies from those deposits to create a profitable series of business loans to try and grow industry. A marijuana-focused chartered public bank cover the risk, given the fact that it is a public bank that is being chartered by California and it is being set up with specific provisions. It does not have to follow standard federal guidelines in terms of the level of interest it charges. You still want to make it competitive, so we're not talking about usury, we're not talking about a payday loan type company where it's charging absurdly high daily rates for repayment, but you're looking at a standard model so that loans can be executed to marijuana-based businesses to grow them, to allow them to consolidate, become more competitive. And in theory, if a market is developed for a refined product and there is a mechanism for export of those goods where the federal government does not intervene, or at some point in the future does not intervene, then you could actually target something like export financing to sell marijuana product to other countries where marijuana is legal.
Have you concluded your?
Yes.
Okay, very good.
We'll take questions. Fiona?
Yes, thank you, Mr. Pai. You did bring up a couple of things about the Florida Export Finance Committee, that they could export out of their state and out of the country. Would it be possible, let's say, if Colorado wanted to set up a public bank and the other states that have similar laws that have passed both medical and recreational, for example, for them to create their own public bank and for us to interact with those states?
Well, here's the problem is that in direct practice, and that's the thing to keep in mind, is that because of the rules that govern interstate transfers, because that has to go through the federal system, you could in theory interact between those banks. You cannot use the federal system to do so.
I understand that.
And the problem is that because of the rules governing interstate commerce, and because of is that the federal government could, depending on how things are interpreted, this has not been clarified under the law, that the federal government could determine that if this is marijuana money, even if it's going between state institutions, it could in theory still block it. So what you'd be stuck in a situation where the only way to effectively create interactions is if you can be certain that transactional interactions between the marijuana bank does not create problems when that bank interacts with other state-chartered institutions within California, and that those state institutions then engaging in interactions with other institutions outside of California are not blocked. You basically have to have intermediaries in both parts, but trying to create a direct interaction currently hard.
And I have one more question. So you said that cities, and I presume counties, can also deposit into this bank, and presumably to pay their licenses, their fees, their taxes, so it's kind of a closed loop system. One of the other issues is obviously the federal government paying their IRS taxes. Could someone deposit money into a California public bank and get a warrant? For example, since warrants, as I understand, are legal tender for the state, could they get a warrant to pay their IRS taxes?
The answer is that the IRS probably may not, and I can't say for certain, they may not accept that warrant directly. What you have to do is to create a mechanism whereby the money could then be issued with a warrant to another institution, which could then engage in that. Right now, any direct interactions with the federal government by anything that is viewed as handling marijuana money has to be considered as restricted or suspect. I don't disagree that it's a fundamental need to do that and pay IRS taxes. The catch is that you have to, based on the explanations that have been given to me in the interactions I've gotten, somebody else who can come after me who's more legal expert can say this. The federal government right now doesn't want to deal with that direct money. I mean, the fact is, it's great. They want the taxes, they want the tax money, but you'll have to be careful about how the IRS directly uses it. Now, since the treasurer was once affiliated with that institution, I'm sure he's probably either a better expert on that
testimony, and I appreciate your explanation of the ways that when we try to structure a general public bank so as to insulate the cannabis industry deposits from the rest of the deposits, so as not to expose the rest of the public bank to risk. But while there may be all sorts of positive reasons to have a public bank generally, I think our charge from the Treasurer is to try to come up with recommendations with regard to how to provide deposit and banking facilities to the cannabis industry. So I want to focus on that. And so what I'm having a hard time understanding from your testimony is what exactly does a public bank just focus on taking cannabis deposits get us in terms of detaching ourselves from federal banking regulators or federal banking systems that other banking institutions don't. The one you mentioned is FDIC. So North Dakota Industrial Bank, the state insurers are going to use FDIC. So that's a plus in my view. Second question that I have is, could you set up a state public bank that's focused solely on taking cannabis industry deposits and have that public bank be detached completely from the federal funds transfer system?
Yes.
Okay, good. That's positive. Now, there are limitations, though, as you explained that, which means that your ability to engage in transactions across the United States between the public bank and other banks is going to be nil because you're not part of that system. But on the plus side, you could have a state public bank where you wouldn't have to worry about getting Fed approval to participate in the federal funds transfer system, which has been a dilemma, I think, that we've seen other states face. So that would obviate that. What are some other benefits in terms of detaching oneself from federal oversight or interference that a state public bank focused solely on taking cannabis industry deposits would get us?
The answer is that it also allows you, the biggest thing is that it allows you to engage in revenue generation through lending, because a federally controlled chartered institution, anything in the federal fund transfer system, is going to be restricted from issuing loans to a marijuana-based business. That what you've done now is you've created a situation where any of the banks that are externally operating, they cannot engage in a loan to grow a marijuana-based business, which means that they could try and create a loan for something else. They could get, if there's somebody who has assets where they've got a home loan, or they've got a car loan, or they've got a loan with some other business asset that's not related to marijuana, and they can generate a loan based off that and convert the money to the marijuana business. But that creates a lack of transparency, a lack of trust. It still creates problems for the bank. If a bank is specifically only focused within California, it's not interacting otherwise, you have the ability, as the Treasurer originally mentioned with the public bank, is to generate revenue for the bank to make, which is fundamentally necessary to make it sustainable. You don't, because normally when you take deposits, that's not going to generate revenue unless you wanted to simply charge everybody fees for the deposits and only offer any kind of interest above a significant threshold, like say $50,000 or something like that. But you need to be able to cover your operating costs. And the most effective way to do that is to engage in lending. The service that provides to marijuana growers and agriculture, to businesses who operate dispensaries, it all comes from that lending capacity.
So would a state public bank dedicated solely to taking cannabis industry deposits be exempt from the FinCEN reporting guideline because it's a solely state public bank?
Yes, that one you're right. Because at FinCEN, and specifically looking at those guidelines, it's supposed to be, if it does not engage in any activity that involves interacting with the federal system. It's once you go into the FinCEN, the system that the federal government has for dealing with money laundering, anything related to Schedule I drugs or otherwise, the idea is to specifically not trigger any of that oversight. A state chartered bank specifically is supposed to be governed by state regulators internally. It's It's not supposed to trigger that. The key is to make sure that you don't, and you have to look very carefully at it. Ideally, yes, it won't trigger any of the consent provisions. And that's what we're trying to avoid.
Okay, thank you.
Alex? Followed by David.
Thank you, Mr. Potter. I do have a question about the structure that you mentioned in your presentation. I want to get a better understanding of that. So, what I understand what you're saying is that the state established essentially a holding company, for lack of a better term, because it would be a corporation, a holding company that would do general public banking type of transactions, but then create a separate subsidiary, and that's a complete firewall between the holding company and the marijuana business aspects. And so there's no, other than opening up the subsidiary, there's no interaction between the two entities, correct? Because we don't want to mix the two. So that the holding company will then get a bank identification number from the Federal Reserve, is that correct?
Yes, so the holding, not even the holding company will get the standard public bank, the non-marijuana bank gets an ID number from the Federal Reserve. The marijuana bank gets a state recognition. You can, that it does not engage in any of those transactions. They're separate identifications.
That was the question I wanted to have, whether both of them have been, but only one of them had one.
Right.
Okay, thank you.
David?
Thank you. I guess I have a statement and a question. I want to actually get your thoughts on this, on the first one. This goes back, way back to one of our first Sacramento hearings. And one thing I found fascinating is that you have these distinguished folks coming from various counties or city treasuries, and they talk about how they receive bags of payments and whatever denominations that is. And so in my mind, I kept picturing like, this truck coming up, dropping off their tax real quick to the city or county. But then again, it's like, well, those typically remain with some of the large institutions, who then probably have a armored car pickup, which then ends up going back to the Federal Reserve. So technically, there is banking going on. It's just it's not really spoken about. Well, and that's my first comment. And then my second part was, it kind of more relates to the payment process, payment systems. How a state would be able to avoid kind of Federal Reserve participation, if I may. If someone is paid in check for their salary or whatever it is, and then you go and try to deposit into their institution that they bank with, how would something like that work?
So you have that. To be honest, that's one for that's a mechanism for a banking aspect. I'm an economist, not a transaction banking specialist.
The reason why I said that, I don't know if that's something like that's still a Federal Reserve possibility where they're going to say, we're still not being involved in it, we're still not going to be in favor of something.
What you have is you have a specific system of guidelines in terms of how banks identify and recognize institutions that transfer money around. And it doesn't necessarily have to involve the Federal Reserve. We have banks in California which are state chartered, which are not part of the Federal Reserve system. The Federal Reserve doesn't have oversight of them. And yet you can still engage in a similar system. It's the transfer system, the federal transfer system, is that how do you create something that's essentially in compliance with the standards that banks operate under, but is still recognized otherwise. But there's no, the fact is that we have a number of institutions here in the U.S. that recognize money coming and being transferred from non-U.S. institutions that is completely outside the system. You just have to, one of the key things in instituting a bank is you have to create a system, essentially using what's already in place, whereby that those transfers are recognized and are still functional.
Hi. Of the examples you mentioned, North Dakota, Utah, and Florida, are any? It sounded like all of those operate across state lines in addition to within those states, and so therefore presumably subject to federal regulation of some kind.
They are, well, they are and they aren't. They are to the extent that interstate transactions obviously have to have federal oversight, but they're not governed, they're not insured by the FDIC, they're not regulated by the Federal Reserve. They operate under a state charter, so they're specifically, the state laws apply. The only way they're going to in terms of their interactions within the state, there isn't going to be federal oversight as part of how it's structured.
And is there any precedent that you're aware of a purely intrastate financial institution that does not touch anywhere outside of the states?
Honestly, that's a good question. Once upon a time, that actually used to be that was actually much more common, is that you had, in the United States, numbers of banks who only operated within the state. And actually, Illinois was kind of notorious for it, because Illinois had a law that used to be in place that each bank only was allowed one branch. Can you imagine that one? So and in that situation, a number of those banks basically only operated locally. Now, once the Federal Reserve System is set up, and there's other things, it's very rare for a bank to be like that, but certainly, it's just historically showed a tons of precedents for that. The question is just how legally it would be executed now, and you just have to make sure you cover it.
Thank you.
Hezekiah, followed by Dr. Sheet. Thank you for the opportunity. Thank you for your presentation. I have sort of a question and a comment, I think. I understand the interest in not commingle funds for the sake of protecting the funds. However, I think from our perspective, I represent business owners, and we've sort of viewed consolidating all of our accounts in one place as actually a huge risk, because it would make the accounts easier to seize if the money were not commingled. And so, interested to hear your perspective on that. And actually, I'll save the comment, but can you share, are the funds actually safe if there's an institution that only holds campus accounts?
Well, the answer is that it should be safe, absolutely, because for the same reason that you have a state insurance of those deposits, that what you're supposed to be doing in that situation, there is always going to be a risk of the federal government deciding to enforce things and going after funds. Fundamentally, the state can't stop that. The main things that you have is to create a system of insurance for those deposits, which you have to do, the state has to create it. If coverage of that insurance is set up specifically so that insurance provision, you set up a provision saying, what if the money gets seized federally? Obviously, if you create a specific insurance for those accounts that covers that, you have to assume the fees on that are going to be pretty high. But it's the same thing as insuring anything else. It's just, I can't say exactly how that would legally be structured. It certainly can be done. There are ways to do that, and you just accept the fact that there are higher fees, because it doesn't matter where you put the money. In the end, we're still dealing with the fact that the federal government can intervene. The good news is that Congress has specifically said they're withholding funds for that kind of enforcement. And you can still, if the state insures those monies, it's going to be insured the same way that any other institution deposits would be insured.
Rashid?
So thank you for your insights. Just a clarifying question. We're not saying, though, that if there's a financial institution that's state chartered where all the activity is occurring intrastate, that those financial institutions are not subject to the Bank Secrecy Act or the AML laws. The feds can still decide, regardless of whether the activity is occurring intrastate or interstate, ESA still applies, and we're going to come in and take action.
Yes, when a federal law is applied to every single bank in terms of the Bank Secrecy Act, yes, there's always that concern about that. As I said, the main thing that's stopping it, and the main thing that you're concerned about in any institution where the money gets put, is the fact that the federal government is currently does not have money and a provision from Congress to not enforce those laws as they relate to marijuana in states where it is legal. That's the main thing that's essentially stopping it. There's always, as has been pointed out to me repeatedly, as long as the federal law says that marijuana is illegal, the federal government can always attempt to enforce the federal law. They are not incentivized to do so. They are not likely to do so, but it doesn't, the fact remains that if it's simply holding your money in your mattress, that the federal government could still come in and seize that money anyway, if they view that to be in violation, to be engaged in some sort of scheduled transaction. What you're doing in this situation is because of the fact that the businesses are already operating out in the open and publicly, that you're creating a safe haven as much possible for that money to engage, to be used for deposits, for security, for loans, and for other elements of commerce, thus reducing their overall risk exposure that you get from hoarding cash.
Thank you.
At the outset of your comments, you talked about, or in the reference to what Bank of North Dakota, the depository function of it. Do you know how many accounts, the individual accounts there are at the Bank of North Dakota?
That's a good question, and the answer is yes, I should know that, and I don't have that current figure on me. I've got a few of the different provisions on that one, and I'm happy to email that to you, but I don't have it off the top of my head. I know the number of figures that they put out are usually a couple of years old, and they do have public elements of it, but it's one thing I am missing.
Any other questions? Thank you, Kevin.
Thank you very much, everyone.
The next panel is panel B, which will focus on public banking opportunities. Our three panelists are Gwendolyn Halsman, Executive Director.
Public banks, the NEED Act at the federal level, moving money from big institutions to local institutions, the registered warrants system you set up here in California, which is quite interesting, and complementary currencies. And we determined after all of that that public banks actually were the most likely and most feasible thing to do at the state level. So we started working on that. We tried to get the legislature to pass a small amount of money to study the impact of a public bank on the state of Vermont, and we failed. The banking lobby intervened even with the study of the question. So we raised our own money and did our own study. We hired the University of Massachusetts Gun Institute for Ecological Economics in cooperation with the University of Massachusetts Political and Economic Research Institute. It was the University of Vermont's Gun Institute. And they did an economic analysis, and they found that a public bank in Vermont, now keep in mind that we're smaller than LA, would produce over $340 million in gross state product and add over 2,500 jobs to our state's economy, as well as bringing in a lot of state revenues. 2,500 jobs may not sound like a lot here, but in Vermont it's over 15% of our unemployment rate, so it's a fairly significant number. Now, just about any other proposal coming before the legislature with those kind of numbers that were peer-reviewed by the state's economist, you would think would be a no-brainer, but in fact, the legislation failed. So we worked on a piece of legislation legislation that was sort of a substitute for that called the 10% for Vermont program, where we successfully got the legislature to enable our state treasurer to set aside 10% of the average daily balance in the big banks, which in Vermont represents $350 million a day, and use that money to lend out through the state lending institutions. Now in Vermont, we have a lot of state lending institutions which function a lot like the kind of banking functions you just heard about here in California. We have the Vermont Economic Development Authority, the Vermont Housing Finance Agency, the Vermont Municipal Bond Bank, the Vermont Student Assistance Corporation, and the State Infrastructure Bank. So the money went out over the last 3 years through these lending institutions. 10% of our average daily balance, so now over $33 million in Vermont has been lent out. It went to things like solar power development, making state institutions more energy efficient, low income energy efficiency in some of the homes, and it produced a 2 to 3% return for the state on that money, which is a lot better than what we get on our deposits in the big banks. That ranges from 0.25% to 0.75% on a good day. So again, we went back to the legislature this year thinking proof of concept. Let's do the whole thing. And we were wrong again. We hit a stone wall, and it did not pass. We're going to go again next year. We have a lot of state legislatures who are co-sponsoring the legislation. But I guess what I'm here to tell you, even though I'm a very strong advocate of public banking, is that public banking is a paradigm change, more than it is a governmental program that can be treated like any other governmental program. And that's illustrated by the type of questions you're asking. You're asking things like, how do we capitalize one of these banks? And I hear that when that question was asked before, the number for California was in the hundreds of millions of dollars. How do we insure that kind of public bank? That's another big question, because state institutions have a hard time getting FDIC insurance, and the kind of regulatory system you would need to set up to do that would make it a fairly expensive proposition. Well, the whole reason that you need to capitalize and insure the money that goes into private banks is primarily because they're private, and they can close their doors and leave the state. We entrust these institutions with one of our most core functions in our economy these days, that is the money creation function. Banks actually create money through their depository system, which is why it's so hard to get a depository system set up. It has to do with the fact that when you get a banking license, the rules that apply to things like client money and other industries don't apply to you. And that enables them to actually create money. Now, because they're private institutions and they can close their doors or go out of business, that's why we have established over the last 150 years all of these elaborate capitalization and insurance requirements. Banks don't have taxation authority, and I don't want to give them any ideas, but they don't. States do. California, you can't just close your doors and close up business, as much as some parties might like to get attracted to that. So you can tax your way out of problems instead of needing to have all that money sitting aside in case somehow, someday, you close your doors. But it's precisely that taxation authority that brings me to a suggestion that's maybe a little bit off of your agenda today, but equally meaningful, I think. Because most people don't realize that your taxing authority is what values the money that we use. If suddenly tomorrow, California or the United States government decided to accept pencils in payment of taxes, the value of pencils would go up quite a bit. And here, with your cannabis industry struggling to pay their taxes and to make banking decisions and to get loans, you could effectively solve the problem a lot easier and more simply than going through all the rigmarole of trying to set up a public bank within the paradigm of our dominant private banking system. It's also a lot easier than trying to stare down some of the most powerful corporations on the planet, and I can attest to that being quite difficult, at least in our context. way you would do this would be to accept some other type of payment for taxes. Now, I know one of my colleagues, Bernard Leotard, came here one time to propose a carbon currency for the city of Sacramento once you established your carbon tax, because you could actually link the two and make carbon trading easy for individuals. But these days, with blockchain technology, it wouldn't be so hard for California to legislate the ability to pay taxes in some type of public blockchain, which is essentially quite like a bank. It's just a distributed ledger system that would enable the cannabis industry to pay their taxes, that would enable them an easy way to put their money on deposit, because you effectively do that when you buy into blockchain technology. And it would circumvent all of the problems that you're struggling with here. Nonetheless, I am a very strong advocate for public money, and that includes public banking and public money creation, which you could do with a public bank. I was instructed to talk about the possibilities of public banking for you beyond just the cannabis sector. And those include things like the kind of lending that's done in our state for energy improvements and energy efficiencies, the revenue streams that you see in North Dakota because of their public banking system. Over the last 10 years, they've brought in more than $500 million in revenues to the state. They actually had a debate one time about getting rid of the property tax because all their state banking revenues. Now that would be a nice debate to have, especially in Vermont, where a lot of our government is paid by property tax. But I would like you to think about the possibility of a cannabis currency, because that would be a much simpler way to do it. And I think you would find that enabling that type of currency to pay your state taxes would also be an incredible economic benefit for your state government. Thanks.
Good morning. We've heard a lot of arguments for a public bank. There seems to be a consensus for that. The elephant in the room is... How's that? Better? Yeah, thanks. Good morning. The consensus for a public bank is clear. And the arguments for them are many, and I don't see a lot of disagreement with that. The elephant in the room is that I've heard estimates that it could take $2 to $4 billion of taxpayer costs to establish such a bank. And depending on your view of the political system and how easy it is to get something like that done, it could take anywhere from a long time to a very long time to make that into a reality. So, how finance a bank like that without taxpayer costs? How launch it in the near term? A privately funded banker's bank can achieve the same outcome as a public bank, but without the taxpayer cost and with far less delay. Now, what does that mean? A privately funded banker's bank. First, I'll define the banker's bank, and then I'll apply it to cannabis banking, and then I'll adapt that result to the public bank concept that we're all talking about. A banker's bank is a pretty simple concept. It's a specialized institution that enables a network of other willing banks to offer products and services that otherwise they couldn't because of the cost or the expertise required. It's basically a platform that enables all banks to serve a particular industry. Now, why do you need a platform like that? Well, the cannabis industry is not going to be banked until the money center banks see no risk of doing so. And then it's likely they'll come in and squeeze out the smaller players, which is typically what they've done in commercial industrial lending and commercial industrial relationships in general. For example, in 1990, community banks held 30% of commercial loans. By 2014, that number had dropped to 15%, and that trend is accelerating, if anything. So that's a logical outcome, but perhaps not desirable. If you're helping community banks contribute to helping communities, or equally stricter accountability for local and state government is concerned. Smaller banks already battle high fixed costs, while money center banks enjoy massive advantages from scale economies. For community and regional banks to bank the cannabis industry, that cost has to be spread over as wide a base as possible. So, what kind of investment are we talking about? Well, there's compliance. We've heard a lot about compliance. That's a big cost center for any bank, particularly community banks. And just general bank compliance is pretty expensive. And when you start banking the cannabis industry, those costs costs are going to go up a lot. So you need to spread this cost over a wide base. Then you have all the compliance associated with the cannabis industry in general. You've got FinCEN, you've got the Cole memo, you've got whatever comes next. You've got the need to really liaise with federal authorities and try to normalize things, because ultimately everybody wants a normalized system at some point. And then you've got all the state and local government agencies that need to be coordinated with. You've got, among others, basically everybody on this panel, but Departments of Treasury, Business Oversight, the Attorney General's Office, all law enforcement. There's a lot of potential for disruption, but a centralized way of communicating and liaising with all these authorities would benefit everyone. So compliance is a major cost. Technology is going to be a major cost. Now, it's kind of a good thing, bad thing, because if you're starting from scratch, you don't have to deal with all the legacy systems, and a bank has many, which can be difficult.
Sorry to interject, I think you're making some really observant points. Can you go into more detail about the cost of banking? Right? People talk about this, and you said at the outset of your comments, $2 to $4 billion, to have the system underway. So for those who don't operate in the world of banking, can you break down those costs so that people have a better sense?
You know, Mr. Treasurer, I would love to give you a really detailed accounting of it. You have a wide range of opinion. To some extent, I'm anticipating what some of my later panelists will be saying, and I'll defer to them on that. I've heard $2 billion, I've heard $4 billion. I was having a conversation with somebody who's going to testify later, and they thought you could make a case for much larger number. It's just capitalizing a public bank with a massive mandate. You've got all kinds of things you have to do. You've got systems, you've got compliance, you've got to, first of all, establish a mandate. And so if you look at community banks, which they're a real disadvantage already, they already have a hard time justifying compliance costs. It's a real albatross around their necks. So that's perhaps one of the best examples. And it's already difficult to compete with money center banks in terms of going for commercial business. Then how are you going to compete? How are you going to comply with all the FinCEN stuff? Your AML, your DSA, and all the other alphabet soup, general compliance requirements will be much higher. But how are you going to deal with all the other things that you have no ability to do? Take another example. Lending is a specialized industry. It's going to require specialized lending. Not easy. It requires industry expertise. You know, large banks can afford groups and lots of people to figure out how to understand the industry, to put the technology in place to track the loans, loan compliance, for example. All those things are expensive, but you need to have a big bank to justify those things. Or, alternatively, a large base of community banks which can share those costs. Does that answer your question? Okay. Unfortunately, my iPad went to sleep. So, you've got compliance, you've got technology, we talked a little bit about product development, product management, product delivery. Again, that's an overhead function at a bank that is going to be very complex here, and which needs to be spread over a large base. And then you actually need to build this correspondent network, because one way that you keep the cost down, think about this to your question, Mr. Treasurer. If you're going to build a bank from scratch that's going to have branches all over California, just think about the massive investment in real estate, if nothing else. The time associated with site location, where should that branch be, what's it supposed to do, in a context of a very specific public policy mandate. You can spend billions of dollars just on real estate. Now, if you have a network of banks that are already there, brick and mortar, who want to participate in the business, but they need a way to do it, then you don't have to spend all that money, right? You can take advantage of physical assets that are already there, while at the same time strengthening community banks who really benefit from having a diversified source of revenue.
Do you mind if I ask a quick question, Mr. Treasurer? Why do you feel like we need so many brick and mortar banks at this point in time? If what we're doing is creating a state bank and we can start to use electronic transfer and other things, why would we need so much brick and mortar?
Well, it's a great question, and ideally you don't. Right now there's a lot of cash going around in armored trucks, so if they didn't have to go as far, that would be a good thing. Now, to the technology point, which is another major investment, it's nice to start from scratch, but on the other hand, you really have to have a bank that is a technology integrator. You have to build, grow, manage a platform that integrates lots of services. And there are lots of other companies that are developing processing services to the question about payment processing, how to stay within the state. Lots of smart people are spending lots of money trying to solve those problems. So you need to be able to pick the best ones, integrate it to a platform, integrate that platform into your correspondent banking network, integrate it with the state departments that have need for control and oversight of it. It's a lot, but the good news is, if you start from scratch, as a bank like this could do, you could minimize a lot of people bricks and mortar. That said, if you're a cultivator and you're in a town that's not close to a major bank, if you're getting paid cash, and you're always going to get paid some cash, the shorter the distance that cash has to travel, very, very likely. That interest? So all that sort of applies the banker's bank model to the cannabis business. So then the question becomes, how do you tweak that to complete the public bank package? Well, first, there needs to be a clear public policy mandate, certainly outside the scope of what I'm going to talk about, but I can say generally the whole public policy regime with respect to cannabis, what that entails, and any other public policy goals that the state might deem appropriate. So you have a mandate. Then you need an economic model that serves that public interest while attracting private capital. Now, one way to do that and to avoid the need to build a bank and to do some of the other things that are associated with actually doing this quickly, acquire a state charter community bank, opt out of the Federal Reserve System, that can be done as we've heard. Then that bank starts serving industry immediately, and it can serve as a test bed and a use case for all the other banks in the state who want to participate in this network. It's one thing to say, come try my platform. It's another thing to say, here's a bank, it's been working on the platform, here and I work for them. People get a chance to look at it, people touch it, ask questions, see what mistakes have been made, see what things have gone right, what things have gone wrong. And also an opportunity for those correspondent banks to engage in talking about things like policies and procedures. How is this going to work as a practical matter? And a chance to build relationships, because the network's more than just about connecting point A to point B. People have to trust each other. There has to be some goodwill between organizations, and there has to be a lot of cooperation, because it's not going to be easy. Simple and easy are two different things. So while what I'm describing is not complicated, it will take work. So that also helps attract private capital, because you have a financial asset to acquire a bank, and that can be the cornerstone on which you build and finance the public bank. So that doesn't require public funding. It can happen a lot faster. So then the question arises, what sort of timing and priorities, next steps, does that imply? Assuming that we're taking, well, obviously developing a mandate, that begin immediately. And that would need to be staged, because obviously there are some immediate needs that we've all heard about here, taking cash off the street being the most urgent. You know, are there ways to do that sooner rather than later? I think there are probably some opportunities that will require conversations between various members of the working group. It's not something I can pronounce on by myself, but I think there are ways when there's a will. Acquire a community bank, repurpose it as a cannabis bankers / public bank. Then to begin to serve the industry and to use those funds to build the public bank that everybody wants. It's a hybrid model that leverages the state's strengths and private investment. Strictly accountable to the public, but moving at entrepreneurial speed to meet the public interest needs and self-funded.
Good morning. Can everyone hear me okay? Thank you, everyone. My name is Matt Stannard. I'm the Policy Director of Commerce USA. Really what we've prepared today has been written in concert with Mark Armstrong, who's sitting right behind me, and who we had asked to be available for questions and answers as well. And so that's what that chair is for. And I want to say at the outset that I feel like these have been, I'm happy that Gwen is here, who I know, to lay out some of the specifics of public banking and some provocative proposals. John's proposals are certainly provocative as well. And have been and probably will talk about models that isolate or separate cannabis revenue from other revenue, like parallel banking systems. And we don't necessarily reject those, but at the same time, again, I feel like this panel may have been a little backwards because one of the things that we have been doing at Commonwealth USA is following the cannabis banking working group meetings very closely. We've attended many of the meetings. We're very familiar with sort of the dynamics of and sort of the evolution of a lot of discussions that the working group has had with specific questions, including about public banks. And so many people might talk about today about systems or ways of building a public bank that slip through gaps in federal law. But I think that it's also good to talk about changing the law, not just changing federal law and the magic bullet, but also the way that creating a public bank might be a means of redefining some of the law, including federal law, concerning cannabis and the way in which both lawmakers and courts interpret the Controlled Substances Act. Because I think, as folks know, there are alternative interpretations of the Controlled Substances Act that might become relevant if the state of California had the audacity to open a public bank and say, you know, we're kind of, okay, we're here, and so this is why we kind of talk about the public bank as a sort of a try or die strategy in which the state of California could assert the heavy hand of the state onto cannabis banking. And so we have a statement which I can make available to committee members. I can email it to Andre, and he can make it available. I'm happy to do that. I want to read a little bit from that, but I want to say that what we've brought to the table today has really been the result of dialoguing with and listening to the working group, as well as the numerous people who have come to working group meetings and spoke up after the meetings, after the statements, in favor of public banking. And those are we consider them our constituents in many ways, and they're stakeholders. And really what we would like to see is a stakeholder approach that as a way of recognizing that neither the Cannabis Banking Working Group nor a special session on public banking, neither of those things would have ever taken place but for public demand. There was the initial public demand, the people of California wanting legal and alternatively regulated cannabis, and now we see across the state of California several groups coming up and speaking in favor of public banking. So when viewed within the lens of stakeholder needs, the question becomes what public banking system creates security, or what banking system, creates security, predictability, opportunity, and sustainability for the primary stakeholders in California's transition to a new cannabis economy. Those stakeholders are the residents who voted to regulate rather than prohibit recreational cannabis, but want to be free of secondary crimes that might take place or criminal activity that might take place around them. And they want security for that. And also the stakeholders are California marijuana-related businesses who, in many cases, whom cities are paying special attention to some of those businesses being owned by and having stakes of those who are victimized by the war on drugs. So there's already this very strong public interest mandate in terms of shaping a system that's appropriate for the stakeholders in California. So California needs a solution to the cannabis banking conundrum, as everyone knows, by 2018. And statements to the working group have established, private banks are reluctant to touch cannabis money absent a prior first touch by the state of California. And although it's unclear whether the Federal Department of Justice has the resources or political capital to hinder commerce in states that have legalized recreational cannabis. And experts have told this working group, some experts have told this working group that they think that the FinCEN and Cole memos in some form or another may remain in place because it's very unpredictable what's going to happen. But the legal and policy context for this problem is always going to be ambiguous and unpredictable. So kind of what we're saying is that, the same as what you're saying, there is no magic bullet. And so the question we should be asking is how creating a public bank would change that conversation or change the game. It's like a chess game, every move is going to change the game. What would be the implications of the state of California essentially creating a public bank, capitalizing it in one of a number of ways, such as including, you could do debt or equity financing, you could issue corporate bonds, pension funds with the cannabis industry, or the general public stepping forward to participate. There's even a constrained common stock that could be used to capitalize a public bank. It's similar to the way the Green Bay Packers function, and Mark is a big Packers fan. And so after studying public banks and public banking campaigns for many years and listening again intently to the discussions in these working group sessions, that we have a 4-stage proposal. I don't want to read it verbatim to you. As I said, I'm happy to send the statement. We've also posted it publicly so that folks can read it. So that first phase would be drafting and legislative enabling of a public bank. And in that phase, for example, the Department of Business Oversight could define a public bank charter for a depository bank serving the unmet banking needs of the California public. And California's legislature would pass enabling laws to support that and protect the banking license. The state would also develop a business plan as part of its application to the Federal Reserve for a master account number. And this, I think, relates to what some other people have been saying, and that is, we are under no illusion that the question of obtaining a master account number, it's not just an FDIC issue, but that question of obtaining a master account number from the Fed is an ongoing legal question. That is not a legal question that has an answer right now. I think that a lot of folks who are against a public bank approach or against various banking approaches have interpreted the 10th Circuit's recent decision in that Colorado case as meaning, this is never going to happen, the Fed is never going to issue a master account number. And other people, I think, jumped the gun as well on the 10th Circuit on the other side and said, oh, this means that there needn't be, that it's not discretionary, that the Federal Reserve Bank has to grant something. And so, I think that that's an ongoing legal discussion, but I think, again, what we're saying is the act of California incorporating a public bank and making that application has political consequences that those of us in favor of public banks welcome. We welcome that discussion taking place and that thing going forward. So in the second phase, I'm sorry, I committed to John. In the second phase, the state bank would create depository services for MRBs and also for other communities, other stakeholders who have been underserved by the banking community. And we mean, in that case, the unbanked and underbanked populations in California could also, could access these depository services. So you have core low-cost retail banking services. This is very similar to the concerns that motivated the postal banking movement of the last few years of revitalizing that, and that is offering these alternative services for those folks. And then in the third phase, we would say the bank could develop its capacity for risk management and compliance automation. And this is where we feel like what a public bank could do is really stare in the face whatever existing federal guidelines, however ambiguous or however contingent those federal guidelines might be, that a state bank of California would stare the call memo in the face or stare FinCEN in the face and say, we are going to do everything and beyond that these non-regulatory guidelines ask of us. Or if more robust standards develop in the future under perhaps a different administration, or if this administration continues to sort of go in circles on that question, California then becomes a model of regulatory compliance because it has a public bank that is doing the complying and providing the security. That's sort of a strong state in being involved in that process. In the fourth phase, and this is where something similar to the Bank of North Dakota in some ways, but not every way, could happen, and that is that the bank might provide credit, lowering the cost of public financing, using public credit instead of taxpayer money or municipal bonds for everything from the construction of schools to loans direct to public employees, to helping communities live where they work, cooperative structures, transitions to a post-carbon economy, all of those things, public interest types of loans can happen. Others have been, and most certainly we'll talk about the general benefits of a public bank in the loaning area during our discussion today. But I wanted to say, I kind of wanted to wrap up by saying that most people in this room understand the general case for public utilities meeting unmet market needs. And that's really essentially what we say a public bank can do. And we've talked to people in Oakland, we've talked to people here in LA, we've talked to folks in Santa Cruz, and really all the way up and down the state, literally all the way up and down the state. There are folks who are asking these questions, Californians, and there's widespread support for exploring public banking in California. And I feel like I want to, one of the things that I really have to add is, at the risk of sounding ridiculous, is that people experiencing the kind of insecurity that we're dealing with, not only the insecurity of being a marijuana business owner right now and into next year, those stories that we've heard and have been really well articulated here, but you also have a whole bunch of layers of other folks in California who are experiencing other kinds of financial insecurity, and you've got cities experiencing financial insecurity, and there's a vanishing public sphere that's going on that is very upsetting to ordinary people, and many of them have come and articulated the case for public banking to the working group, even when they kind of weren't supposed to, because initially there was a sense that we really just want to focus on the cannabis problem. We think it's a banking problem, and that in that sense, all of those issues are kind of joined together, and that a way of addressing that also are all kind of joined together. Some critics of public banking from the financial sector have a phrase they like to use when they say, well, public banking seems like a solution in search of a problem, is what they say. And I guess I would say ordinary people don't see it that way. Defectors from the banking sector who, once they no longer work for a big bank, start advocating public banking, they don't see it that way. And ordinary people don't see it that way. And we feel like there is a policy case for this, and we've gone deeply into that in our statement. And we think that we could prevail in a protracted stare down with the federal government over many of these questions. But we also feel like there's a strong moral case for a kind of democratized approach to finance, to cannabis-related finance that is tied to a larger movement for economic justice. So, thank you very much.
speakers. For Matt, you know, the first speaker, Kevin Cowden, talked about having a firewall. But if California is going to form a public bank, why wouldn't we bank everyone and bank the unbanked and commingle? What's the problem if it's going to be interstate closed loop system?
I think that in some ways that sort of answers its own question, and that is, you know, at some point, what we like to say is, you know, if in some alternate reality the federal government decided to just, you know, have a draconian crackdown on all marijuana-related business activity that they knew was going on and that had already been commingled, you know, including through taxation issues and all of those things. If they suddenly decided to do that tomorrow, we have a much bigger problem than the banking problem. For whatever reason, that's not going on. It's part of an ongoing political dynamic. And so we don't, you know, if people want to do isolated solutions or firewall solutions, I don't think that we would discourage those things. But really what we want to do is, as Glenn put it, is change the paradigm. And creating a public bank and sort of recognizing that underlying inevitable intermingling seems like the more authentic approach to going forward with that policy.
And to Gwen, you know, I know you talked about the blockchain technology, but right now, in order to even buy Bitcoin or all the other systems, you have to go through an exchange. Someone has to put cash, right, into a system to get into the blockchain. Like, how would we do that without some sort of public bank if we're not allowed to, you know, put cannabis money into regular banks to be able to get into the blockchain currency model?
Well, I would argue that the creation of a California blockchain, a truly public blockchain, not a private one, it draws advantages. Even the new Ethereum is fundamentally a private blockchain that you buy with dollars. Same with Bitcoin, same with Litecoin, all of those things. If California, instead of putting all the money into developing this anomaly in the banking system, which would be a public bank in the context of private banking, to have a public blockchain that people could buy into with their dollars from their businesses directly through PayPal. I mean, it isn't that hard to purchase those things without a bank. I've bought theirs and I didn't have to go through a bank. But that's another question. You know, how would a truly public blockchain be developed? And how would you accept it for taxes? As I understand it, the ethers are fairly new. They're very transparent. They're managed democratically. They're quite different than Bitcoin in terms of the ability to ensure that they haven't come from problematic areas and being able to see all the transactions. I could envision, and I'm not a blockchain developer, so I can't tell you how exactly, but I could envision a public California system that also was accepted for taxes. Once you accept it for taxes, that actually gives everybody in that system something to spend it on. So you're essentially creating another system next to the private banking system that people in California could use for their business, for their other payments, for all sorts of things that wouldn't necessarily require a bank of any kind. That's actually the beauty of blockchain, is it's a disruptive technology for banking. Now, I think that's another big question, and I realize it wasn't exactly on your agenda, but it could be another solution to the problem we're trying to solve here.
Okay, and to John, a couple questions. So the Bankers Bank, would the Bankers Bank be the entity that does all the due diligence for their network of banks? Or would the network still have to, you know your customer, the SAR, with consent guidelines, and pull them all that?
Sure. Well, I think it'd be a balance, because I don't think any bank participating in a correspondent network could concede all responsibility for that as a maximum matter. They would need to feel comfortable. That said, you can enable them. Due diligence, for example. Again, in a specialized industry, there's a lot associated with due diligence on loan. So, on the other hand, if you're a local conduct diligence. There are things such as due diligence lists. There are ways to automate a lot of this, and there are ways to enable it. There'd be a balance, but there'd be some involvement that would be required, but ultimately what you're trying to do is enable the local banker to do what he does best, which is develop a relationship, get to know the customer, provide them what they need, without having to worry about all the overhead associated with doing it properly.
And then the last thing, the Oregon House, the governor signed House Bill 4094 last year, basically exempting banks and credit unions from any state liability for conducting financial services with state-regulated marijuana businesses. And I'm wondering whether you think that that provides a level of security for banks in California to be able to bank if California passed a similar law.
Right, I'm not familiar with the specifics of that law. I can tell you that banks are going to require some collaboration, some kind of sanction from the state. And developing that is a process that will involve many people in this room. But yes, it helps a great deal to have something where a bank can look at that and say, the state is telling me this is okay for me to do. I think that would go a long way to solving the need to provide accounts for depository services.
Thank you.
Thank you. I have a question both for Ms. Walton and Mr. Hansford. First, thank you for your comments and for inserting a radical notion. You've done the Republic of Vermont proud today, and I appreciate that. We have at least one municipal, pretty robust effort to establish, or at least to investigate the idea of a public bank here in California, which is in the city of Oakland. And I wonder, along the public blockchain avenue, is that something you see would have to be done on a statewide level, or could a municipality potentially set up a similar type system for their own local economy?
I don't see any reason why the state or a municipality couldn't do it. Again, though, I'm not a blockchain developer, so I don't know how it's done, but I do know it's not all that complicated. There are numbers of them out there now, and they're all private. What I'm talking about is something different, actually, something that's democratic, public, and transparent. That's the beauty, in some ways, of this new technology that has come into existence, and it's being used all over the world. I think that if California developed one, maybe the municipalities wouldn't have to, because they could use that same system to pay whatever fees and services they have to the state of California, and vice versa. And it would get out of the current private banking paradigm, which is really a problem in many ways, not just for the cannabis industry, but as Matt said, for social justice and for environmental issues. You know, the private banking and money system is what is systematically driving our world into both environmental destruction and human impoverishment because of the way it's structured. And I think looking at alternatives to that is really critically important.
Thank you. Mr. Lansford, yeah. So I'm curious, like a little more granular about how a banker's bank works. So does the banker's bank accept deposits from its member banks, or does it act more like a clearinghouse? I heard you say the word platform. So is it kind of a combination of a clearinghouse of transactions plus also a lending network? Like, how does it actually logistically work?
Well, everything you said, the answer would be yes. There would be deposits kept. And correspondent banking is something that goes beyond public banking, by the way. All banks have correspondent networks. They have balances with each other. They share loans with each other. There's all kinds of needs for that type of relationship. So it would be based really on that correspondent concept. Then when you get to specific things, it's a question of how much you have to do. For example, how are you going to keep all the payments inside the state of California? And how are you going to make sure that all the payments received comply with all the legal requirements? All that gets pretty technical and pretty complicated. That becomes a technology question. So in that sense, the banker's bank is a technology provider and a technology enabler. With respect to making a loan, it's probably a balance of the two, because a local loan officer is going to need some oversight and some assistance. On the other hand, I'm a firm believer there's no substitute for knowing the person that you're lending money to, right? Being there and community with. So I think the answer to your question is going to depend on what that particular function you're talking about. Is you talking about lending? Are you talking about deposits? Are you talking about, for example, as I said earlier, everybody wants this to normalize over time. So what's the best way to communicate with the DOJ and the federal regulatory authorities, the FDIC, and the Fed? And there are people in those organizations who also agree there's a need for a solution. So having one focal point to do that, you can also direct other resources to those conversations. It can be a very effective way as opposed to everybody trying to get in the same doors and have the same meetings.
So does the Bankers Bank have the federal master account? Does it engage in the ACH system, or
No.
it's independent?
That's why you buy a community bank, state charter bank, you know, the Fed system, so you don't have the FDIC.
Okay.
Yeah.
Thank you very much.
You're welcome.
I've got a question for Mr. Lunsford. So, just want to understand the Bankers Bank model, which you're speaking of. So the way it works today, today we have the Pacific Coast Bankers Bank in San Francisco. Essentially, it runs this entity, right? So if a business wants to get a loan from their bank, and the bank can't really take that big of a risk, then they decide, okay, well, we can break this out. And we got about 2 or 3 other banks that actually help us spread the risk and still keep my customer and give him his commercial loan, and then essentially you'll still pay me, but then I'll spread the rest of it out to people to help me capitalize that loan. So is that the same model that you were talking about with your kind of?
It's a good example. Yeah, loan syndication is one of the more obvious ways because a local bank may not have the capital to make the loan that your local customer requires. Yes.
So and you mentioned then that Bankers Bank can essentially opt out of the Federal Reserve System, essentially opt out of the FDIC insurance model. Would that also then apply to every single other bank that would then work with that Bankers Bank? Because they would also be involved in the federal crime, and so they also would opt out of the Federal Reserve System and the FDIC as well?
No, I don't think they would. You know, what they would have to do is participate in the system, as Fiona said, if there's some sort of state sanction, just them more comfortable with that would be part of a Bankers Bank public policy mandate.
But it's not state law we're talking about, federal law. So whatever law respects to the state would not apply to federal enforcement. So I'm just trying to get a sense so that every single bank that's involved in the syndicate would also have to opt out of the FDIC and Federal Reserve System because they are involved in particular business.
I think you could accommodate that if that's where you're going. That would be possible. I don't think that's going to be a requirement.
So how do they get around then the restrictions with respect to banks being involved in violations of the Controlled Substances Act?
Well, let me first say they have to come to the system when they're comfortable and willing and able to do that. If they're uncomfortable with that issue, they're obviously not going to want to participate in it. So then the question becomes to them, when do you take that risk? Right? What are the things that get you comfortable with it? Right now, the balance is on the side of not taking the risk because there are very few protections and very few assurances. And moreover, as a fact of the matter, in many cases, there's not the ability to conduct that type of business, even if you wanted to. So why consider legal risk if you're not able to execute from a business standpoint? So when we can do that, it's going to be a different decision for everybody when they want to take that risk. What are the things that might offset the legal risk? Well, there's a variety of things I think that could be involved in public policy mandate that can make more people comfortable. I've been told by reliable sources there are banks that would provide accounts now to marijuana-related businesses if there was some level of state assurance. Now, that doesn't trump federal control, right? There's a question of when do you take the risk? You make a measured judgment of what are my protections, what's my downside, what are my business appraisers to do certain things, and that will be a different decision for everybody.
So this question is for Matt. I want to focus on something that you said, which was anything that California does, any move it makes towards, say, a state bank is going to have reverberations or ramifications, perhaps nationally, perhaps in D.C. And I don't know if you've given this some thought. Would it seem reasonable that if the state of California started doing some overt act towards creating a state bank, it is going to perhaps incentivize big banks to want to lobby Congress to get some sort of safe harbor or carve out of federal law allowing for banks to bank state legal cannabis money that were to happen, then, and that law were to pass, every bank in California would be trying to get in on the action pretty fast. True or not? Yes. Yeah. So then, if we've gone too far down the road with a state bank and for capitalization expenses of $2 billion or $4 billion, maybe we're employing state employees to run the infrastructure of a state bank. Has that whole thing become instantly obsolete, or is there enough of a market for non-cannabis, the underbanked, the unbanked, to continue the venture, or are we now sitting on an instantly obsolete entity?
No and yes. So that scenario is very likely, and it's I think an instance of how of exactly how a gesture like that by the state of California would immediately change the banking game. There are also myriad independent reasons why a public bank, whether or not it was the primary service of the cannabis economy, is a great idea and is also sustainable and capitalizable. And for the capitalization question, I would turn to Mark really briefly.
Right. So what I want to point out is in the 4 phases that's in our proposal, the first phase is to create a public bank charter. So that's within the Department of Business Oversight. And by virtue of doing that and identifying what the constraints are for the operation of a public bank in the state of California, you're basically giving notice nationally that California is proceeding before any capitalization takes place. So that new charter is what can be defined and I believe will capture a lot of headlines and result in the changing chessboard, as you mentioned.
So for those of us that are in state government, I guess the hope would be if that dramatic change were to come, it would come before we started spending any taxpayer money. I guess that's really the ideal situation. Okay.
Yeah, but there are many ways to capitalize a public bank, as we mentioned, and that there are many reasons just bracketing the discussion of cannabis. So maybe what happens in your scenario is that the state creates a public bank with the intent of serving cannabis revenue. The other banks lobby Congress to reinterpret or amend the CSA, which is very likely there bipartisan support for amending the CSA, especially if the banks like it. And then you've still taken steps to create a public bank for equally valid reasons, even if the cannabis part goes away, and as the experience of North Dakota suggests, capitalizing that is not necessarily possible.
Mr. Longford, thank you for your comments. I appreciate the bankers bank, or I would argue credit union, but I kind of wanted to go back to that a little bit and the argument that there's, a lack of public trust in our banking system. I'll also argue we got community banks and credit unions out there also, so, putting that view across the entire financial industry is a little tough when maybe one actor who's having problems. So, public trust in our banking system, I would argue that the larger system is all I have to say on that. So, but going back to public trust, what this conversation and the Bankers Bank reminds me a little bit of is actually within the Treasurer's Office, the CalCap system, so the California Capital Access Program. And within that program, there's certain requirements, right? If you're a lender in that program, then you have certain requirements on underwriting and interest rates and access to capital for people who are unbanked or underbanked or can't get a loan. So going back to the Bankers Bank conversation, it could be a state bankers bank that has certain requirements to meet those unmet public needs or certain requirements that a lender has to meet.
Oh, absolutely. And let me just add, it would include credit unions as well as banks, all financial institutions. The idea is to spread the wealth as much as possible. Yes, absolutely, that would be the case. And that would be part of the balancing act. This can be a great vehicle to use a newfound source of revenue that's not currently there, and to grow that source of revenue to achieve public policy. The question is, how do you balance out the economic model to attract I started my career at a regional bank in the South, and it was a very commercially driven bank, and they were really good. They had huge market share. And eventually got bought by the SunTrust, and now part of a massive bank, which is a great organization. But all the people that were the really good loan officers, really good at make loans, really good at serve their customers, they eventually became too expensive because that wasn't the delivery model anymore, right? Making commercial loan decisions becomes how's it working the algorithm, what's our balance sheet need, you know, the local person becomes a sales guy. It's not a bad thing. It just, but those guys now, all of them got their pensions, 20 years working for SunTrust, they all work for community banks now, and they're having the time of their lives because they can really engage in banking that they started out doing, which involved knowing people, being close. And there's really no substitute for actually seeing a business once a week when you drive by, right? And there's just a lot of things that you aren't really knowing people and hold your customer thing. Well, it helps to know people individually to know your customer. So I couldn't agree more.
Well, we're talking about Bankers Bank. You want to elaborate on the Bank of North Dakota, right? Because in essence, we're talking about the Bank of North Dakota, right? Bankers Bank, not much of it, doesn't have a lot of individual accounts. The industrial bank, so you know, let's say, so that people have a sense of what the bank, of how the Bank of North Dakota actually operates.
Mr. Trigger, when after that point, I do have a follow-up to that. Exactly what I was saying.
You want to do that first?
My question is very similar. It's just along the lines of if North Dakota Bank has a master account number granted to it, which I believe it does.
Yes.
Is it a fair comparison to say what kind of accomplish in California is similar? Two separate questions.
Yeah, they are somewhat separate questions, but what I want to point out is Bank of North Dakota was identified by the Federal Reserve of Boston in one of the reports that came out as being a banker's bank. It is considered to be that, and as such, it has a master account number for electronic transfer of money in and out of the payment system within North Dakota and the banks that it represents. It also ensures their liquidity by funding short-term loans to the 100-plus community banks that it works with to make sure that they have the cash available to them in order to meet their liquidity requirements. And when there's an insolvency issue, they actually loan money, the Bank of North Dakota loans money to the holding companies in order to build up the capitalization of those community banks. And so by many regards, it's acting as a banker's bank. And the key point I want to make in this discussion about Bankers Bank is that, you know, the big issue with Bankers Banks is the same with community banks, and that is lack of capital or constrained capital. And very often, Bankers Banks are formed by networks of community banks. And the core issue in banking typically goes back to the amount of capital you have on your balance sheet in order to fund larger loans or to increase your loan portfolio, et cetera. And that dynamic has changed dramatically with a public bank, which is different from a private banker's bank. And the reason why is because, you know, the stock or the equity or the capital for a public bank that's acting in a banker's bank capacity is not traded in the stock market. And so you don't have swings like you do, we had in 2008, 2009, where the value of equity was compromised by 50–80% for banks, and then all of a sudden loans were shed, credit lines were shut down, and even liabilities like deposits were shed as well. So you ended up with a situation of a contraction of the credit available to the economy, which sent shockwaves through the rest of the economy. And that's precisely why the value of a bank is that because its stock is not traded, it's counter-cyclical. It can still make loans at those times when there's a great contraction. So, kind of went on that, but I think that might be helpful in this discussion about bankers' banks.
Yeah, I do have a question, a follow-up question. So, bankers' banks, to you guys, if we did create this, would this be private networks of bankers' banks that would be set up, and anybody who wanted to join the network would kind of set it up privately? I state chartered because we would opt out of the federal FDIC rules. We could pass legislation that says we're going to provide some sort of assurance, and then what other role would the state have? I don't know if there's a sharing agreement or something that, you know, I don't know.
I think that would really be up to the state, right? Because ultimately, what is the mandate, what needs to be accomplished? And as a practical matter, it's not possible without state assistance. So what makes sense in that context? As long as the ultimate thing is attract private capital, then just about anything is possible. So there will be one bankers bank, other banks would join that network. It would itself have a bank that would be sort of the flagship, the first one to get started before other people. To Alex's point, John, you need to have somebody ready to go. And then with respect to state's ongoing involvement, well, that depends. That would depend on the voters that control the state required. There are a lot of opportunities to really streamline a lot of processes, tax, financial reporting. All that would be determined in conjunction with all the interested parties here. And then with respect to the state, whether it has an interest in that bank, I think that would certainly be a fair thing to ask. So I think it would be a chance potentially for, instead of putting $2 billion or more or less, whatever the number is, instead of costing taxpayer that, there's potential windfall to the taxpayer.
I'd just like to clarify one thing too. The Bank of North Dakota was set up in 1919. That was before the FDIC existed, but after the Federal Reserve existed. So there is a difference between opting out of the Federal Reserve System and opting out of the FDIC system. They're two separate questions. One has to do with whether or not you get this master account number and whether you can effectively make interstate trading. The other really has to do with whether the depositors are going to trust the bank. Because if you opt out of the FDIC system and say make California the ultimate deposit insurance for the bank, that's a bigger ask, in my view, than just getting out of the FDIC, out of the Federal Reserve System. So I'm just trying to clarify that. North Dakota is not in the FDIC system. The state does guarantee the deposits, but it's largely public deposits. They don't have a lot of private accounts. That's a difference than what you're talking about here, for the cannabis industry being the depositors in a bank, along maybe with your public entities. That's really the beauty of public banking, is it gives you a place to put your public deposits that puts them back to work for the state of California. But North Dakota is the size of Vermont in terms of our population. It's not the size of California. So if I was setting up a quasi-private banker's bank that was going to take deposits from a major industry, I'd be a little bit more nervous about opting out of the FDIC system.
I just have one quick follow-up for the comment on this, folks. If step one is to pass a state charter for a state-owned bank, could then the state, rather than establishing its own whole cloth, could it purchase a banker's bank, and then would it still accomplish what you all are proposing?
Yes, what we were suggesting for a public bank charter would apply to both a state-owned bank as well as a state-chartered city-owned bank like Los Angeles. Either one of those entities could purchase a bank, but they would have to renew the application. So it's not like they get the charter immediately. They'd have to go and ask for the public bank charter. And I do want to draw a distinction. Those banks typically that would be bought would have a commercial bank charter in existence. And if the public bank charter was in existence, that would be a new application.
Can you comment, the Bank of North Dakota looked into cannabis and chose not to offer the services, right? They were concerned about losing their master. Can you shed light on that?
So the voters in North Dakota last November voted medical cannabis to be allowed in the state. And there are different variations of medical cannabis. And in North Dakota, I don't know to the extent how much of an impact that would be on the economy. But given what the Bank of North Dakota decided, and I haven't heard that firsthand, but given that, I suspect that's a legitimate concern because they don't want to jeopardize their existing business. idea of segmenting the cannabis money from the cannabis deposits from the rest of the bank, I think is a novel one. I haven't heard that before today, and I think that may offer some sort of protection to the Bank of North Dakota, but I don't know if they considered that. But obviously, the concern is becoming an island, a large vault essentially that doesn't have communication in the electronic funds transfer world, and so they don't want to jeopardize that with what would be a very small percentage of their deposits. Thank you very much.
It is 11:47. We will
Hi. John. I was told that you might have one of John's cards. I don't have one of his cards, but maybe this is my card. Send an email.
penalty will address the challenges associated with public banking options. Please take the up. Ellen, you can take the move to the back, please. David Cotney is an advisor with Great Gravity and former commissioner of the Massachusetts Division of Banks. And Don Childers is president and CEO of the California Bankers Association. David, please.
Good morning, Treasurer Chum and members of the Cannabis Banking Working Group. My name is David Cotney, and I formerly served as Commissioner of Banks for the Commonwealth of Massachusetts, where I officially retired last fall after 26 years of state service. It is my pleasure to testify before you today regarding the experience in Massachusetts of evaluating the feasibility of establishing a state-owned bank. In 2010, the Massachusetts legislature enacted a bill, which I'll refer to as Section 180, which required the creation of a commission to evaluate the feasibility of establishing a bank owned by the Commonwealth of Massachusetts. I serve as co-chair of that commission. I should clearly state that although Massachusetts looked at the feasibility of a state-owned bank in 2011, at that time, we had no notion that marijuana would be legalized either for medical use or adult use. Yet, here we are today, where Massachusetts voters have passed two separate ballot initiatives, and like California, have legalized both medical and adult use of marijuana. So while the Commission in Massachusetts did not consider the potential benefits of a state-owned bank to cater to the needs of the marijuana industry, the challenges that we identified remain the same. As I will separately describe, banking in the marijuana industry only compounds some of those challenges of establishing and operating a state-owned bank. So the Commission first convened in May 2011 and met a total of 6 times over the course of the spring and summer of 2011. And in addition, in accordance with Section published by the Federal Reserve Bank of Boston entitled The Bank of North Dakota, a Model for Massachusetts and Other States. States? Question mark. The Federal Reserve report was issued in May of 2011 at the beginning of the Commission's deliberations. The Federal Reserve did a thorough job evaluating reported benefits of the Bank of North Dakota, the nation's only public bank, and comparing the conditions in the state of North Dakota with the Commonwealth of Massachusetts. The Federal Reserve evaluated the 4 most commonly cited benefits of a state-owned bank and analyzed the performance of the Bank of North Dakota. These benefits included stabilizing the state's economy, providing local businesses improved access to credit, augmenting the lending capacity in small community banks, and helping to fund the state government through profits. So the Federal Reserve concluded that other than helping to supplement the lending capacity of community banks in the state, the Bank of North Dakota had a negligible effect on those other 3 cited benefits. The Bank of North Dakota has had an impact in helping community banks to participate in larger loans than they otherwise would have been able to on their own. On the last reported benefit, returning profits to the state, the Federal Reserve stated that the Bank of North Dakota's contribution amounts to less than 1% of total state revenue in North Dakota. It is important to remember, as has been stated earlier, that all state and local funds in the state of North Dakota are required by law to be deposited in the Bank of North Dakota. In addition, while the Bank of North Dakota has been profitable for many years and returns 2/3 of those profits to the state, should the Bank of North Dakota incur any losses, the state will be liable for all of them. In short, the Commission ultimately recommended against establishing a state-owned bank in Massachusetts. And below I will describe each of those reasons or challenges that the Commission cited. First, the Commission stated that the initial capital investment to establish a state-owned bank would be significant, and it was not clear to the Commission that the benefits of a public bank would justify such costs. The above-mentioned Federal Reserve study looked at the startup costs using the Bank of North Dakota as a benchmark. If Massachusetts were to have established a state-owned bank with the equivalent size and lending power of the Bank of North Dakota in 2011, it would have required approximately $3.6 billion, that's billion with a B, in startup capital. At the time of the Federal Reserve report, that represented about 21% of the Commonwealth's direct debt outstanding. And I'll just state that the Bank of North Dakota and the reasons for the commission in Massachusetts were to look at a public bank that was devoted to infrastructure and small business lending and investment. So just that as a background. Second, the commission concluded that the experience of the Bank of North Dakota, the only public bank in America, was not an adequate comparison given the vastly different economies and banking industries between Massachusetts and North Dakota. By way of comparison, with only 758,000 residents in 2016, North Dakota is about 1/9 of the size of Massachusetts. On the other hand, with 6.8 million residents as of 2016, Massachusetts is about 17% or 1/6 the size of California. North Dakota is dominated by mostly small, rural community banks with very few out-of-state banks and only one mega bank with a small presence. While Massachusetts still has many community banks and credit unions, it also has regional banks as well as State Street Bank and Trust, which are headquartered in the state. It also has many out-of-state banks, including large banks with significant presence. The economies are very different, with North Dakota more dependent on energy and agriculture, while Massachusetts has significant employment in education, financial services, healthcare, and biotechnology. Third, given that the Bank of North Dakota relies on state and local receipts to be deposited in the bank, the Commission determined that this was an unacceptable risk. The former Massachusetts Treasurer, who was a member of the Commission, indicated that it was his fiduciary duty to seek the highest returns for all state and local funds. In addition, as has been mentioned, deposits of the Bank of North Dakota are not insured by the Federal Deposit Insurance Corporation. This is due to a long-held policy by the Board of Directors of the FDIC, articulated in its statement of policy from 1998, in which the FDIC set a high bar for any application for deposit insurance by a domestic governmental unit. While not a complete ban on deposit insurance for a public bank, the FDIC articulates that it would be unlikely that any public bank applicant could meet the statutory criteria for deposit insurance given concerns over independence and the ability to raise capital. And I think a prior panel stated that one alternative would be to acquire an existing bank, and just so that you're clear, the standards for a new bank and the standards for what's called a change of control, which is to acquire an existing bank, are the same within the eyes of the FDIC. Fourth, the Commission stated that the infrastructure investment activities in Massachusetts, one of the criteria the legislature directed the Commission to evaluate, were far more established than in North Dakota. There are a number of public and quasi-public agencies that perform infrastructure investment, including water pollution abatement and school building assistance, not to mention investment in industries such as biotechnology and green technology. Fifth, and similar to above, the Commission felt that Massachusetts has a plethora of well-developed public, quasi-public, and nonprofit agencies which offer loan programs to support small business and infrastructure. The Commission recommended that expanding these existing programs would be faster and more effective to meet any perceived gaps than investing in a public bank. North Dakota, on the other hand, does not have the same network of public and quasi-public agencies devoted to lending and investment. In fact, Eric Hardmeyer, the president of the Bank of North Dakota, has stated, "We are the financiers of economic development for the state of North Dakota." So the abundance of Massachusetts public, quasi-public, and nonprofit agencies that provide such services and could potentially be crowded out by a public bank, in the opinion of Commission members. And my understanding is that California likely has substantially more public, quasi-public, and nonprofit agencies devoted to such efforts. Although the focus of your working group is on banking the cannabis industry and not on promoting infrastructure infrastructure and small business lending and investment. The challenges that the Massachusetts Commission identified are similar. First and foremost will be the cost. If California were to establish a state-owned bank to serve the deposit needs of the cannabis industry only, rather than for lending or investment, presumably startup costs would be less on a relative basis than we estimated in Massachusetts. However, if, as has been suggested, your state use a public bank both for serving the marijuana industry and for infrastructure and small business lending and investment, startup capital could be even greater than we had estimated. In addition, the inability of a bank to obtain FDIC insurance is likely a huge challenge for any government to face. Without deposit insurance, the deposits of a public bank in California would be backed by the full faith and credit of the government of California. In the event of a failure of the bank, California would have to make the determination as to whether or not it can cover costs, and if so, how much. Finally, while the goal of any enterprise such as a bank, even a public bank, is to generate profits, continuous profits are not guaranteed. In fact, very few startup businesses are able to generate profits within the first few years. The Bank of North Dakota did not generate profits within its first few decades. California would have to be willing to absorb any public losses, just as it would have to accept any profits from the bank. And just turning for a moment from my experience as co-chair of the commission to my experience as commissioner of banks, just wanted to offer a few observations. The inability of businesses affiliated with the cannabis industry to obtain bank accounts is somewhat recent, though growing phenomenon. As your working group has pointed out, more than half the states have legalized marijuana either for medical use or recreational use. With the rapid expansion of state legalization, many businesses have developed to meet the demand. These businesses have confronted the existing problem of de-risking, whereby financial institutions have either pushed individual businesses or entire industries out as customers because of the perceived high risk. This problem exists for many legal industries, such as money service businesses. It is even more acute for the marijuana industries, which, while legal at the state level, remains illegal under federal law. And while it would be helpful to have Congress clarify this issue, none of us are holding our breath for Congress to act. And if I could, one of your opening comments, Treasurer Sean, was that this problem could be solved if Congress removed cannabis as a Schedule I drug. I would argue that that would be helpful, but ultimately not the answer, because we still have federal regulators to deal with. And state regulators have worked hard over the last several years to combat the issue of de-risking. Unfortunately, the federal banking agencies have not done enough to combat this de-risking trend, and in many ways have contributed to it, either through their actions or their inactions. So in the case of cannabis, both the Cole memo from Justice and guidance from the Financial Crimes Enforcement Network appear to offer a way for banks and credit unions to safely bank these businesses. And I just want to clarify one comment that was made on the first panel, was that there was a question as to whether you can structure a public bank to avoid any federal regulatory oversight. And I believe the answer was, yes, you can structure that. I would disagree. There is no way to avoid some federal financial regulatory oversight. You may be able to avoid FDIC, you may be able to avoid the Federal Reserve, but FinCEN is the overseer, and they have said if you don't have a federal functional regulator, the default is the IRS. So the IRS would in fact become the federal regulator for any public bank in California. But putting aside that issue, getting back to what the Justice Department said, what FinCEN has said, most banks and credit unions are really not concerned with those memos or guidance. What they want to know is, what does my federal regulator think about this? And what most banks and credit unions want to know is that if they follow guidance provided by the Cole memo and by FinCEN, they will not be held responsible by their federal regulator for the illegal activities of their customers. This problem could be largely solved with just such a pronouncement from the federal banking agencies. However, to date, the federal agencies have not wanted to come out and make such a pronouncement for fear that something could go wrong, that they might be held responsible. Like banks, regulators are risk averse. And as I mentioned, even if Congress were to act, it's the federal regulators that would be the one that the banking industry sees and interacts with, not with Congress. And as it also has been mentioned, one other issue, of course, or challenge is the issue of a master account in the Federal Reserve. Really, without a master account, a public bank would simply be a place for customers to park cash, as there would be no way, either for the customers or the bank, to move money for any other purpose. This is something the organizers of Fourth Corner Credit Union in Colorado learned. They obtained a state credit union charter to serve the needs of the cannabis industry in Colorado. Unfortunately, they were denied a master account by the Federal Reserve based on the fact that the underlying business of the proposed credit union's customers was illegal under federal law. Credit union, or the organizers of the credit union appealed. They've had mixed results in court and have subsequently changed their business model. So thank you again for the opportunity to testify. I was asked again to testify on the challenges which I tried to lay out. And after Mr. Childers testifies, I'm happy to answer any questions that you might have.
Thank you. Thank you, Treasurer, and members of the working group. My name is Don Childers. I'm President and CEO of the Colorado Bankers Association. And for 5 years, since 2012, our association has been on record favoring the legalization of providing banking services to marijuana businesses. We are anxious to resolve the state and federal tug of war that has us in this predicament. We sympathize with those customers who are not able to serve. A few items about Colorado. After years of medical marijuana, Colorado legalized recreational marijuana in November 2012, effective January 1st to 14. Colorado banks that had previously banked medical marijuana businesses suddenly stopped because of federal regulatory pressure. We essentially went to zero banks providing services to the marijuana industry. To me, there was no attention by federal regulators during the medical marijuana phase, but as soon as it turned recreational, we got their attention. In December of 2012, just after the constitutional amendment was adopted, our governor appointed a task force and a number of working groups to recommend to the 2013 legislature changes that needed to be made in time for the January 1st, 14 implementation. The Colorado legislature in 13 adopted a variety of bills that I won't go into today, but in 2014 they came back and enacted a marijuana financial services co-op, modeled after the credit union model, if you will. We were neutral on the bill, but expressed our belief that it would not succeed, and regretfully we've been correct. The marijuana co-op has never gotten off the ground. There's not been a single application filed because people are unwilling to take the risk that is inherent in that venture. The conclusion we draw out of all this is that literally only an act of Congress can resolve this issue, and we mean that seriously after an awful lot of thought. Today, we do have about a dozen small banks and a few credit unions offering services to the marijuana businesses of Colorado. That amounts to about 12 banks, which by my calculus is about 1/10 of 1% of the banking industry in our state. So if you use that as a measurement, it's a long ways from serving the needs that are expressed here today. The Colorado Task Force thoroughly studied the situation and all the options that are available, including the public bank, and we reached one conclusion in regard to banking marijuana, and that was to secure a federal exemption for legal marijuana businesses so that in Colorado they could bank legally, or to create a local financial institution that is not subject to federal regulation. One, we were not able to create one that was not subject to federal regulation. We did create one, and it failed for lack of interest. A key policy that has been tested, has been referred to several times here today, it's been tested in federal court, is Federal Reserve access. It is not a settled law in this area, but there are a number of legal barriers. As has been mentioned, fourth quarter credit union in Colorado, chartered on a technicality, did apply for a Federal Reserve account in 2014. It was denied by the Federal Reserve. It sued the Federal Reserve. The trial judge ruled that he could not force the Federal Reserve to violate the Controlled Substances Act. And a three-judge panel recently, appellate panel recently remanded it back to the trial court, but you had three different decisions or opinions from the three judges involved in the panel. It was really hard to reach a conclusion out of that one decision. The status now is that that credit union effectively is thrown in the towel in regard to the litigation. It has refiled its application with the Federal Reserve for access, and that is based upon its removing all ability to service marijuana businesses. It's literally written that into the application that it will not work with marijuana businesses. So if it is granted approval by the Fed, which I happen to think will be conditioned, and the only way the Fed would grant access is on the condition that you abide by all federal law, specifically including these laws that we're referencing, that it will get the access, but it will be no solution because it will be under all the federal restrictions that the rest of the banking industry deals with today. And I simply know it took them 3 years from inception to get to that point, which ties to a point I'll make in a while about the length of time it takes to go through these issues. The Colorado Working Group in regard to the public bank concluded that ownership is not an exemption, and I think that really is the simple summary of this whole issue. All banks are subject to federal law, and we think that does apply to public banks as well. There's one exception that we can have, and that is a state-owned bank with no connection to the payment system. It's a catch-22. They can have the access through the Federal Reserve, but that means complete federal regulation. Or they can have no access, which means they can't effectively operate as a modern bank because they cannot access the payment system. The rationale and the reasoning of our working group I'll now try to walk through. First and foremost is that the payment system access is essential and it is not available. The reason that it is essential is that it basically controls the transfer of all funds into a bank. You can't wire funds to another bank without Fed access. You can't process credit cards at all. You can't write checks that are honored at the other end. So it really is the core of the business, and that is essential. A public bank, we believe, can only accept deposits in cash, can only pay that back out to its depositors in cash, and only at its locations, because other locations are not able to honor that because they can't get the funds through the system. In essence, that amounts to a big vault, because you can put cash in, cash out, but you can't really do anything else with it. Regretfully, that doesn't serve the needs that we have in Colorado. There has been, I believe, a mistake made in some of the earlier comments as I interpreted them, which was to infer that intrastate activity was permissible. I think there's confusion between intrastate banking and interstate commerce in regard to the access to the Federal Reserve System. I believe any access through the Federal Reserve intrastate, too, is completely barred if you engage in prohibited activities such as marijuana. Now let me turn to deposit insurance, and I understand that California may well go without FDIC insurance and maybe insure itself. We had moderate discussion on this topic in the working group, but we credit that if Colorado decided to insure these funds, that we in essence were putting taxpayer money to potentially make whole the depositors of the institution if something went wrong, marijuana businesses and individuals. And the political consequences of that made our public officials on our working group very nervous and unacceptable or unreceptive to that notion. The third item that we looked at in terms of a public bank was the capital, and I won't go into that because he has expressed, David has expressed the amount of capital that is needed, and I wouldn't argue with that reason. I would simply note that in Colorado, no public officials have shown any appetite for that kind of political risk that is necessary for that degree of capitalization. The next several items I'm going to cite as reasons that the working group looked at all involve the inherent conflict of interest that you have between owner, operator, insurer, and regulator all being one entity. In banking, separation of power is such an essential item that we don't have one federal banking regulator. We actually have 4 federal banking regulators, 4 primary ones, and we have all the other ones every other business has. That just is a way to underscore the importance of the division of roles that the conflicts I'm about to mention don't address. First, in governance, you would have to decide with the public bank who would make the decisions and how those people would be chosen. Regretfully, we had a lot of debate on this that ended up with terms like cronyism and other things being bannered about as the way that the state would pick its own decision makers for its own entity that it would insure. And I just suggest that you really ought to consider that one very carefully. I'll then move on to the area of regulation. Who would establish the rules and who would decide who those people are? Our working group was very wary of low public confidence that would result in the state essentially regulating itself. And let me give you a couple of specifics. There are hundreds and hundreds of topics on which there are bank regulations. Which private bank restrictions would not apply to a public bank? Would it be consumer protections? Would it be core safety and soundness limitations? Would it be money laundering? Would it be any one of hundreds of other topics? All of those are very sensitive and important issues and potentially volatile issues. So that was a topic that made our group very wary of embracing the public bank concept. Another aspect of that regulation is that policy can change or even whipsaw with each election. And Colorado, as a purple state, does not really want to flip-flop back and forth between which party has control of the state government influencing the policies of a state-owned bank. Banks need stability in everything they do, and for that reason, I think the only real solution is the stability of having the permission in statute. The next item I would mention simply is the examination of banks, who examines them and for compliance, and who then enforces that. I'd say it's been universal public policy by the United States government and all 50 states for at least a century that an unrelated third party engaged in that role of examining and enforcing the regulations. In the case of banking, that is the government itself, is the third party, but it is not the entity basically policing itself. I'll move on to a couple more items that came up in the working group. While a public bank wouldn't necessarily have to comply with conventional bank regulation, that doesn't mean that it should avoid the underlying principles that are in those regulations. Let me just pick one example out of hundreds. If you had a public bank that didn't need to deal with the regulations, say, on concentration is one issue I would bring up. I think you could have some very undesirable results. Concentrations is the excessive lending to one industry or sector or customer. It's essentially putting all your eggs in one basket, which is regarded as a very unsafe and unsound banking practice. It also applies on the deposit side, where there's undue reliance on too much concentration in one industry or sector or customer. While a California public bank would not necessarily need to follow a regulation on that by the federal government or by California law, it doesn't necessarily mean that the public bank shouldn't be controlled in some fashion on that kind of principle and all the other principles that underlie regulation. The last item I'll bring up with the
we found nothing that would change the current framework of marijuana-related business customers' assets, that is, the deposits in such a public bank, being subject to federal seizure. A public bank doesn't get around the possibility of federal seizure just by the ownership of it. Regardless of that federal seizure isn't often exercised because it isn't very often used, the legal cloud it introduces is significant. It goes in the banking industry so far as it not only precludes marijuana-related businesses that are in production and retail in marijuana, but it breaks in all sorts of third parties, such as landlords where one tenant in a strip office complex is related. That means, in the eyes of the federal government, that entire property is subject to federal seizure, and that makes our bank regulators very nervous. And so there essentially is no lending to entities like that as well. This isn't theoretical. We have had incidents in Colorado. In one case in particular, I remember, where nearly $1 million was seized by the federal government at bank accounts of 3 separate banks over one violation of the Controlled Substances Act and the Bank Secrecy Act and the Money Laundering Act. A few other observations. Since the task force and working group reached its conclusions, we have had a lot of discussion in the state legislature, but literally not one single bill to advance a public bank. And we are a state that's very liberal in allowing public initiatives on the ballot. We've had no public initiative on this in the elections since this. Timing is also an issue. Our working group felt that even if we could successfully address all the issues that we've already gone through, we couldn't do so in a timely manner. It would take years to walk your way through all of these because it's new ground in many ways. And then one last one, I don't know whether it applies in California or not. In our Constitution, we have a flat prohibition against the state or any public entity aiding or having any ownership in any corporation or company. That was just a kind of final seal on the issue. What did we turn to as a resolution? It was that the task force and the working group concluded that the only rational way to address this problem was to obtain a change in federal law. So what we've done to seek that is that our governor and our members of Congress have written letters to the federal agencies, and the bottom line is nothing has changed. We have had meetings with our governor and members of Congress and those federal agencies, and nothing has changed. We have adopted state legislation that allowed for the Marijuana Financial Services Co-op, and regretfully, nothing has changed. At the federal level, we've had multiple members of our congressional delegation introduce bills on this topic, taking various approaches. One that I think deserves a lot of attention is one by Representative Perlmutter, who sits on the House Financial Services Committee and understands banking law. It would create an exemption to the Controlled Substances Act and all other relevant laws, Bank Secrecy Act, Money Laundering Act, etc., to permit the banking of marijuana businesses on both the transaction deposit side and on the lending side. This bill actually has recorded bipartisan support that is often overlooked. There is a vote on July 16, 2014 that passed by a bipartisan margin on the floor of the U.S. House that basically adopted this bill. It was an amendment to another bill. Half of Colorado's Republican members of Congress voted for it. And you can see by the margin, which was 231 to 192, that dozens of Republicans joined many Democrats in supporting it. The amendment passed. The underlying bill failed later on, but you nonetheless have a recorded vote that shows a clear majority of the U.S. House. I have to think there's support in both houses to do this, and there's obviously a growing constituency that can press for this kind of federal change, which I think could occur faster than you could develop a public bank even if all the problems disappeared. One conclusion, or a couple of conclusions I would bring to your attention. Despite the curb appeal of a public bank, I think the reasons I've walked through basically would prevent the formation of it. I would suggest you really do not underestimate the challenges and the complexity and the time requirements of these sorts of issues. They are enormous for a normal bank. They are absolutely humongous for the kind of first time ever decisions that need to be made in a public bank. One last note, money laundering is still a problem even if you have public banks, because the very definition of money laundering is taking the proceeds from an illegal activity and making those appear legal. When a public bank or any bank accepts a deposit from a marijuana source that's from an illegal activity in the eyes of the federal government, and it goes out the other end of the bank and appears to be legal, that is the very definition of money laundering. And we have a lot of banks concerned that they, by accepting marijuana deposits, would actually be the money launderer, the bank itself. So I have one final suggestion for you, and that is you not proceed until you have two things. One, a third-party study by knowledgeable, unbiased professionals that the public bank operation could work. And secondly, and probably more importantly, a legal opinion from respected lawyers in banking law that this is legal. Despite the ideas that have been proposed today, I don't think any of the alternatives to a change in federal law actually get us, all of us, where we want to be, which is the ability to bank marijuana businesses. So I'm sorry I can't bring you better news. I wish we did have the solution to bank marijuana businesses. But I've told you our conclusion that the change in federal law is the only way. So thank you for the opportunity.
Questions?
So, Mr. Schiller, thank you so much for your insights, and it's not necessarily what we wanted to hear, but it is something that we need to hear. So, a question about the vote that took place in 2014. You mentioned that half of Colorado's Republican delegation voted in favor of it. How did we get to that result? I guess one of the things that I've advocated for is that the cannabis industry, that state actors, that the financial institutions, that we all sort of close ranks and lobby Congress together. Is that something that happened in Colorado? And is that what led to the result that we saw in the 2014 vote?
Well, I have to admit we were all kind of surprised at the outcome, and we didn't really press for this kind of a vote because we didn't perceive the majority of votes were there yet. But it was on a bill where a representative from, I think, Louisiana threatened to run an amendment that would prohibit the federal government from spending any money on the enforcement of the Controlled Substances Act in this realm. Representative Perlmutter, being on the other side of the issue, tried to talk that representative out of it and threatened that he would do the opposite and require or prohibit the use of funds to limit the banking of marijuana and so on. So that is what led to the amendment being put out there. He did not think it would pass. And so we were all pleasantly surprised when it came out with that 40 or 50 vote margin, which shows, a lot of Republican support as well as Democrats in the U.S. House.
Okay. What would you think of, you mentioned the Perlmutter bill, and that's I think now it's called the Safe Banking Act. It's the Safe Harbor bill, basically. And it's in the House Financial Services Committee, again, I believe. We've also proposed in the last meeting that maybe we have a corollary analog to the Normark Farr Amendment, which cuts off DOJ's funding spending on the Enforcement of the Controlled Substances Act, and we proposed, what if we were to do that with BSA as well, to say DOJ and Treasury and FinCEN are not allowed to spend federal funds on enforcement of BSA against institutions that are banking state legal cannabis businesses. Do you think that that's viable? Do you think that that would have a positive effect? Do you think it's, what do you think of that proposal?
I think that goes a long way, but you need an absolutely comprehensive solution so that banks who seek the stability of statute change feel comfortable, because they would be investing a lot of time and effort and money trying to set up the
practice of accepting marijuana deposits, and they don't want to go down that road just to have to stop the business. There's one key element that could not address. Two of the four primary bank regulatory agencies at the federal level are independent agencies. They're not inside the executive branch, so that not even the president can order them what to do. They still have, they're governed by their own boards, but they still have a mission to implement all laws in the United States. And that's where they have been reluctant to move in the direction of leniency.
And if I can just add, I mean, Tom's right, that a budget rider to prohibit expending of funds to enforce those laws is really a mandate approach. It doesn't apply to the federal regulatory agencies. And budget riders are done through the annual appropriation process, which means that you can prohibit it one year, and then all of a sudden the next year it disappears. You need to have certainty to this, rather than saying, don't enforce these laws.
I want to thank you both. It was great testimony on both your parts. Don, you kind of hit on something I was trying to touch earlier, talking about, if you opt out of FDIC, opt out of Reserve, well, how do you make payroll? How do you pay your rent? How do you, because there's still transactions that still have to clear. So that's one part of it. And I think you brought up a good point, is that basically you're just one giant cash vault. And Alex and I were talking about it at our break. It was like, you have all this cash coming in, but what do you do with that cash? Where does it go? How does it get back into the system? So is that so?
A century ago, you could bank that way.
Right. Yeah. Right. Yeah. We still have those coins and whatnot too. So I just wanted to thank you for bringing us a point of view right now. That's my concern with the thoughts.
I just have a quick question, and it's been one that's confounded me. You brought up the premise of money laundering as a state trying to figure this complex problem out. From a state perspective, we collect taxes, a lot of federal taxes that actually go to the federal government. In effect, aren't they also money laundering?
I would say in a technical sense, yes. But if that same answer applies to the bank acceptance of deposits from a public entity that is holding marijuana tax money. The difference is that the bank regulatory agencies have drawn the line and they've said no to these marijuana businesses. They've never said a word, to my knowledge, about public entities deposits. And I think that's because they don't want to take on that battle. And if you did a strict interpretation, I believe the same result would come out. But they've just never brought up the topic.
Any other questions or comments? I have a question for David. I think the calculation for the capitalization required, can you go a little bit into that?
No problem. So the Bank of North Dakota is the largest bank by assets in North Dakota. It's about $4 billion. And it is the largest by far, the largest bank in North Dakota. As I mentioned before, in addition to acting as a banker's bank to help facilitate lending by community institutions, it also performs many of the other lending and investment functions that, for example, in Massachusetts, are done by either public or quasi-public agencies. A $4 billion bank in Massachusetts would not necessarily even register in the top 10. So again, it's an extrapolation to say the Bank of North Dakota does a lot of work, does a lot of good work on the lending side and in the investment side. And if you wanted to have a bank with a public bank in Massachusetts with the equivalent authority on day one as the Bank of North Dakota. Now keep in mind, from the Bank of North Dakota is 100 years old and was started by the state issuing bonds to do the initial capitalization. But if you wanted to have something of the equivalent power open up the doors on day one, you would have to have capitalization of $3.6 billion to be able to have the same level in a much larger state, the same level of lending and investment authority as the Bank of North Dakota does in North Dakota. It's a simple extrapolation, and it's, again, assuming that you wanted to have something on day one. You can always start smaller. You can always say we don't want to do some of these. You need capital. Capital is a cushion against risk. Lending and investment are forms of risk, so you need capital as a cushion against that. You could always design a different model with less risk, which requires potentially less capital if you're not subject to FDIC or other federal capitalization rules. But you would always want to have some capital to guard against whatever type of risk you're measuring against.
So, and you made comments about it took decades for it to become profitable. The period of time when we look at it, it's like 23 to 25 years. So but if we look at it, did a quick glance. But if you have a better understanding of that, I would appreciate it. And in addition, can you give us a sense of lending, the nature of the businesses that they're investing in, or the lending activity in North Dakota, in the areas that are more profitable than others. We would greatly appreciate the nature of businesses and how California would operate differently than others.
So as has been mentioned, the Bank of North Dakota acts as somewhat of a banker's bank by allowing a customer of a bank who applies for a loan that is too big for that bank to handle on its own, to be able to act as an aggregator. And so that's one of the things that its primary lending activities. Obviously, it was started because of the agricultural focus of North Dakota and the backlash against the financiers on Wall Street who were charging usurious rates to farmers in the Midwest. So they do, so that they have agricultural lending products, small business lending products. My understanding is that they were into some student lending, but in a sense exited that market. But then they also do a whole host of economic development activities, including lending to cities and towns with regard to water pollution, financing new water infrastructure. They loan a program for health care to help develop particularly rural areas to build hospitals. So they do a lot of economic development activity that, again, Massachusetts is owned by separate quasi-public agencies. I'm not sure if I answered all of your questions.
Yeah, you answered in general scope, right? The concern for some of the people in California is how much infrastructure support for the Dakota pipeline and other types of. So that was right. I didn't know if you had a sense of that type of activity.
I don't have a sense of in terms of volume of activity.
Any other questions? Thank you very much. So before we introduce the next panel, we definitely wanted public participation. And so let me ask my staff to identify themselves. They have sheets to sign up for public comment, which will take place after the fourth panel. So if you are interested in participating, please fill out one of these yellow-colored forms. The next panel is panel D. The intent is to sharpen our view of the future outlook for the cannabis industry. Obviously, we're going to have a context of in which you're trying to bank. You want to understand how the thought process and the expected growth, and we know that it can change dramatically what the cannabis industry is in California. So the participants in this panel are Michael Steinmetz, CEO of Volcana, and Sumit Mehta, partner of Mazatali.
join us at the front table.
Thank you. All right. So I'll kick this off. Hello. All right, great. Thank you for the time. Thank you today. We're very grateful for hearing all these explanations and getting a chance to meet all of you. Like I was introduced, my name is Michael Simons. I'm the CEO and founder of Cannabis. Tell you a little bit about what we do and then a little bit about why we do it, and tell you a little bit about the complications that we face as an operator in this space, and also the partners that we have in this industry. So Cannabis was started about 2014, and now have grown to be one of the largest cannabis sun-grown organic brands. We source exclusively cannabis from the Emerald Triangle, which is the largest producing region of the world. There's an estimated 53,000 cannabis farmers all over California, mostly concentrated in this region of the Emerald Triangle, formed between Mendocino, Humboldt, and Trinity County. These 53,000 cannabis farmers have really amazing ways of life. You know, these communities that, you know, they back the land many, many decades ago, not having access to connecting to public utilities and sort of, you know, the hidden nature of prohibition has resulted in these farmers, most of them live totally off-grid, totally sustainable, solar panels, rain catchment programs, they have all kinds of other crops, foods, vegetables, carrots, cabbage, and it's a really, really beautiful sense of community up there. In terms of our operations, we have distribution here in Northern California and in Southern California as well. And we recently purchased an old and abandoned vineyard in the heart of Mendocino, which is the third largest vineyard of the area. And we're repurposing it to do basically a cannabis processing center for small farmers. So just like in any other any other agricultural vertical, say coffee, cacao, or rice, you're as a farmer, you take your product to a centralized facility to get all the services you need post-harvest that are often very expensive to do on your own. I always give the example of a coffee grower. If you're a coffee grower, you grow your beans all year round, you take it to a centralized facility to get dried, to get roasted, to get packaged, and processed at scale. From there, distributed to the world. We're proposing to do that to the farmers of that region. Currently, we work with about 100 farmers in the heart of Mendocino and trying to scale and grow to more and more farmers as they come into compliance. So, to give you a little bit about kind of the challenges that we face, I'll tell you a little bit about kind of our perspective as a business and also the perspective of these small farmers. So, from our perspective, I think industries like countries, they kind of grow at the pace of the capital markets grow, right? Without the access to capital, this growth is kind of stagnant, right? For us as Flocana, we work with small farmers that have kind of formed agricultural cooperatives, working together, collaborating to be a bigger scale, and we've had to find very creative ways and sources for capital, right? Traditional lending terms do not exist, so we've had to go, venture capital doesn't exist, so we've had to go to more angel investors and small family offices. Often the due diligence process takes probably 10 times longer than usual because of all the complexities of dealing with the space and the legality around it. For us, it's really not easy to get loans, even for asset improvements, real estate improvements, for the facility. We're trying to repurpose and redo, and once you tell them kind of the activity that's happening, it's an automatic shutting of the door. Also, in any traditional agriculture environment, you also have a lot of financing for equipment and for trimming and processing and machinery. None of those things are available to us, so we have to use all of our cash, equity cash, to actually buy this equipment. That's a huge, huge detriment to our own growth. And lastly, in terms of operations, safety is a huge concern for our organization. Having operations in Southern California, Northern California, and up north, we oftentimes have to have more and more complex operating structures to basically handle the large amounts of volume and of cash. In fact, to adhere by the insurance requirements of the state, we have to get a bulletproof car, which is kind of crazy to think about. A bulletproof car going up and down the states, very expensive to get one of these, and also no ability to finance it. And now to kind of switch gears a little bit in terms of the needs of the small business owners, I think the reality of small business in any kind of industry is most small businesses fail because of cash flow, not usually margin. Small farmers operate in a very seasonal crop, right? They're planting in February, March, April. They're harvesting towards September, October, November. And during this period, they have huge influxes of cash at the beginning to buy soil, to buy seeds, to buy all that equipment, and then huge influxes of cash as well at the end of the season. And they're not seeing the return of that money towards after November, December, usually the following year, where they can start selling their crop. So basically, they have a full year where they have to put a lot of money up front and don't see the ability to pay any of that back until a year later. The ability to give small microcredits to these farmers would be hugely invaluable for all of them. These farmers usually have to go to hard money lenders, which are usually on favorable terms, very tough conditions, very hard to navigate. There's also the farmers, we because of our inability to get credit as well, we have to take the product on certain terms, 30-day, 60-day terms, and the ability for these farmers to do factoring, to be able to get paid in advance for these receipts and these invoices is not available to them. And it's a very big challenge for farmers that, they moved up to kind of preserve this way of life and this cannabis plant, and, because of the inability to use a banking system and report stuff, they don't have much history, they don't have much credit. But working with an organization like us that can kind of show all this financial records, do the accounting for them, do the legal work for them, gives the banking institutions the ability to use us as a vehicle to enter and operate with them. I think the challenge also of these farmers receiving cash doesn't only end there. The entire county of Mendocino, estimated GDP of 80% is coming from cannabis, which means everybody is using cash in the ecosystem. So restaurants, gas stations, stores, everybody is using cash, and the problem just continues to perpetuate across the entire economic of the county. And, that kind of just very high level, an explanation of kind of what we both do, obviously kind of quickly summarize, solving, this banking issue with a simple, checking account ability, would give the ability of tens of thousands of families and farmers to really incorporate themselves into the legal banking system and into the legal compliance system. This would be a huge value for them and for the communities they are part of. It would also eliminate a lot of the criminal activity associated with cannabis, with having huge amounts of cash having to be stored and shipped around the state. And also give us and you guys the ability to have compliance and tracking. A lot of these farmers, they're kind of waiting eagerly to be able to provide that, do that in a safe manner. And I think that kind of wraps up my kind of high-level explanation of what we do and how we're suffering. So thank you.
Good afternoon, everyone. Thanks for having me here today. When I was asked to speak about the future of the cannabis industry and provide a high-level overview, I thought about various ways to approach this topic, and one of the ways that I thought about approaching this topic was to look at high-growth industries across different nations, across history, and try to ascertain what was common amongst those industries. The four commonalities I came up with were culture, religion, government, and finance. We certainly have a cultural viewpoint that has shifted dramatically in the last 4 years to embrace the medicinal and non-medicinal aspects of this ancient and sacred plant. This committee has the opportunity and responsibility, and I believe therefore the obligation, to look at legislation and to look at financing in a responsible way so that when we arrive at full federal legalization by 2021, we have prepared an industry that can face the potential onslaught of the established corporate entities that may change the face of this industry for the foreseeable future. My name is Sumit. I spent 20 years on Wall Street, and I've been looking at investments my entire life. I came to this industry in 2013, looking at it from an investment standpoint. Started making investments in 2014, and have exclusively made investments in cannabis since then. I realized over 2 years of making investments that this was not just an industry, it was a movement, and it was not just enough for me to put my money in it. I also wanted to put my time and effort into it to help grow it in a responsible and ethical manner. I've since been involved with the launch of my business last year with groups such as the Artview Group, which is a private investor group. We have placed $135 million into 146 companies, all in the cannabis space. I've also been involved with the public markets in Canada, and there are several exchanges, not the least of which is the Canadian Securities Exchange, that has 50 publicly traded cannabis companies out of the 318 that are listed on there that collectively represent some of the deepest, largest, and most liquid capital markets for cannabis in the world today. It's no coincidence that the first billion-dollar market cap cannabis company also exists in Canada. When I look at the industry today, I see a $7 billion industry growing to $22 billion by 2021. This implies a compounded annual growth rate of 29%. When I look at a 29% growth, I see an industry that's doubling every 32 months. I also see an industry that is growing faster than any other in this country today. And I was curious, so I looked back over the last 50 years and looked at $5 billion industries that are growing at double-digit growth rates and found the following. The cannabis industry today is outpacing the growth of home video and basic cable as they grew in the 80s. It is second only to one other industry in the history of this country, and that is broadband access. It turns out that Americans like cannabis more than anything except Wi-Fi. It also turns out that this is the first industry that is born after the information age, and that has a couple of implications. We have the opportunity to have 2017 technology meet 10,000 BC plant, and that has tremendous implications that are very prevalent for lots of reasons across this planet. As we look at 30 states with medical laws, 9 including BC with adult use laws, and 43 countries around the world currently pending decriminalization legislative attempts. The second implication of this industry being born after the information age is that I look at it like I did the technology industry when I was a tech analyst in the late 90s. Technology was an industry. We treated it like an industry. It is now part of every industry. You cannot imagine an industry without technology. Cannabis is no different. Cannabis is currently being treated like an industry. We can accept its uses, but we are not recognizing them. Cannabis has impact on food, fuel, fiber, paper, medicine, and the environment, just to name a few. We have not even addressed the issues of civil liberty, social justice, and cognitive liberty. There are no doubts that big business will arrive, and big business will arrive with a bang. I find it responsible to move forward, not by leaving people behind, but by bringing people forward. And when I look at the end of Prohibition, and I look at the end of Prohibition arriving in 2021, I see the first attacks coming from food, liquor, pharma, and tobacco. But I don't see the following industries far behind. We have hospitality, we have travel, we have entertainment, we have lounges, we have theaters. We don't have THC sound, but we will. We will move from surround sound to THC sound. It has large implications for how we will live, how we will treat this plant, and how this plant will treat us. Let me step back for a second and walk you up the rungs of the capitalization ladder to see how industries are built and ultimately capitalized and where health can go from a financial and legislative perspective. When we looked at cannabis startups in 2014, March of 2014, 92% of startups were self-funded. 2 years later, that number dropped to 72%, with a lot more cannabis companies starting up. The capital that was required to fund these companies came from private sources. Second step of the cannabis capitalization ladder, friends and family. The third step was mentioned earlier today, angel investors. Angel investors through groups such as the Arcview Group have poured hundreds of millions of dollars into this industry, and I applaud the efforts to help these small businesses that are currently constricted and choked by capital constraints because of federal regulation and the moat caused by that regulation around the cannabis castle today. We keep moving up the rungs of the capitalization ladder. We get through angel investors, we get to family offices. We're now seeing family offices come into the space and come into the space in a big way. We also have crowdfunding efforts. The Jobs Act that was passed last year in June, the funding from small businesses is now open to investors that are non-accredited. And we're seeing large amounts of capital being placed through crowdfunding businesses specifically catered to the cannabis industry, financing this industry. Private equity and venture capital funds were mentioned earlier. That would be the next step of the capitalization ladder. And finally, ultimately, every industry that exists today is owned by the public. And let's not mistake the fact that the public currently already owns a large chunk of the cannabis industry. The largest investments that any of us have in our 401ks, in our mutual funds, in our savings accounts, are directed towards real estate and agricultural technology, both integral parts of the cannabis industry. So the question is, how do capital moves that you make impact decisions and impact the industry going forward? The question is, when you build a system to legitimize businesses, the backs of which have been the forefront and the foundation of this industry that's going to be built, do we bring them forward, or do we allow for big corporations to come in and swallow up what has been a lifelong struggle for folks to nurture a plant that has killed less people than Celsius? When I look at the future and I look at the decisions you make, I would ask the following question. Do you want an industry that looks more like Big Pharma, or do you want one that looks more like the Green Bay Packers? Thank you.
Thank you very much. Questions or comments?
It'll probably come as no surprise that I appreciate the perspective that both of you just shared tremendously. Being third generation subsistence cannabis farmer who gave all of that up to work on this policy, it's tremendously encouraging to hear the type of dialogue we're having. So thank you, Mr. Treasurer. Thank you for providing a forum for this conversation. Sumit, you have such an interesting perspective, being from this Wall Street world that where I grew up is not viewed positively, frankly. And yet coming here and discovering the movement that we are and the values that we hold and ultimately the vision we have for our future. And I'm curious, in practical terms, what can we do? How can we lay this foundation for an industry that strikes a new path and that ultimately balances more between, what I'll call the interests of the capital class profitability and the interests of the everyday classes, the farmers and the folks that are working. What can we do tangibly to start building that? And I apologize for digressing a bit from the core question of banking, but it is all tied together. That we have this hesitation even about normalized banking because we've seen what small farms have faced with the financialization of the sector. And so, is there anything that you can offer that we can start building on?
I think it's very healthy for capital to come into this industry. I think it's healthy for capital to come in a responsible way. And I think that the efforts that you put forth to establish a framework within which capital can arrive in a responsible manner are going to be crucial to the long-term health of this industry. There's no doubt that there is a return potential that capital is driven by. Certainly capital, like nature, abhors a vacuum and will serve to fill it, but also like water finds its level. When we look at the cost of cannabis today, 2016 average retail price per pound was $5,100. This compares to spinach at $3.83 and perhaps the closer cousin to cannabis, hops, at $7 a pound. Similarly, when we look at a barrel of oil, we collectively as a nation freaked out when we got north of $80, and we're now happy that it's at $50. The retail value of the price of a barrel of cannabis oil is $5 million today. I'll stop with one more example, which is the price of an ounce of cannabis extract. It's $1,400. Compare that to the price of an ounce of gold at $1,250. Certainly, when we have an incredibly high margin for what is essentially a plant, we have a large attraction for capital to come in and capitalize the space. I think that the specific answer I'd offer you to your question is that as we allow for every business to have access to capital, we allow for every business to have access to growth. The number one reason businesses go out of business is they run out of money. And and if we're able to effectively capitalize them at rates that are not extortionary, then we're able to also provide a level playing field so that these businesses can adapt as the spot price of cannabis, which I suspect will experience a precipitous decline as we ultimately see agricultural margins normalized across all cultivation options for farmers. The way that these businesses can capture margins and remain sustainably healthy is having the capital to deploy in ways in which they can reduce their costs. Some of these, the largest, as you might be aware, the largest cost of cultivation is energy, and the second largest is labor. When we see multi-scale grid solutions that combine solar power with natural gas on-site power generation, we're able to see how energy cost can come down by quite a bit. It's certainly not enough. There's no plant on this planet outside of specialized fungi that is grown indoors, yet 90% of cannabis is grown indoors. We simply cannot compete with the power of the sun. And as cannabis moves outdoors, we will find other ways to reduce the costs. Currently, the second largest cost is labor. And as you may also be aware, it costs roughly $200 a pound to have someone trim your plants. We are seeing artificial intelligence paired with robotic solutions, and we are seeing trimming technology get down to where it can trim to a length, to a precision of 15 microns, which is smaller than the width of a human hair. So as we are seeing the potential costs come down from $200 a pound down to 15 through the application of modern technology, we're also seeing a need for farmers to be able to avail themselves of cheap capital to be able to deploy this technology and stay in business. The ultimate goal is to be able to provide a clear pathway as companies climb up the steps of the capitalization ladder to public financing so that this industry can be owned by the public, can be shared in its responsibility through the public and not be held by a few interests that are centered in centered in large corporations.
Real quick, a follow-up comment, if I could, and then I think a rhetorical question. I'd like to strongly encourage that we work together to develop those standards for onboarding capital that isn't extortionary, as you said. We've heard usurious rates, we've heard a number of terms for it, but there is clearly a relationship between contributor and recipient of capital that is healthy and one that is not. And I think our industry would benefit tremendously from establishing those standards early on. And then, secondly, and this is far beyond the mandate of this commission, Mr. Treasurer, but I will take the liberty, and it's not a specific question, but a rhetorical one. At what point do we recognize that cutting labor costs means cutting our jobs? We're not all farmers, some of us are farm workers, and automation, if it's not serving the interests of our populace, I don't think is actually in the interest of our society. And so I'll yield there. Of course, we're way beyond the scope of our conversation, but thank you for the opportunity both, and thank you for your answer and your perspective.
So, Sue, I'm wondering if you could comment a bit on the cost of capital right now. Because we don't have access to bank loans, we've seen a flourishing market for private capital, for angel investors, family offices to come in. But not all is at rates that are actually going to be fair to business operators. And I'm thinking back a few years when the Colorado market opened up, and we were seeing rates of interest as high as 20 and 30%. Can you talk to us a little bit about how the cost of capital has changed over the past few years and what you foresee in the absence of banking?
The cost of capital is still high. It's extremely high. It can be in that 15 to 25% range. When people are looking to lease real estate for uses that are cannabis related, they are also faced with paying lease rates that are 2 to 2.5, maybe 3 times market rate. When the cost of this plant has been as high as it has, there have been enough margins along the supply chain to support these high costs. But as the price of cannabis continues to come down, and we've seen a continued decline in the range of 24 to 38% in states in which it has been legalized, these margins get squeezed. And these cultivators have to adapt. And the entire industry would benefit by a low-cost Chair, just one aside to your last comment I'll make is that the introduction of ATMs over the last 30 years has led to a massive increase in the number of tellers in this country.
Gertrude inspired another question there. You know, one of the things that I hear a lot, and Michael, I assume you may hear this, we work with a lot of the same farmers, there's a real concern over onboarding capital in a way that gives up ownership of the farm. This isn't just our farm, this is our home. And, you know, we're seeing right now a collapse in Ireland's farming sector where, I mean, there's hundreds of thousands of acres of family farmland that's being transferred to external ownership. What are the prospects for capital that doesn't require us to give up ownership of our farms and our businesses? Is there a way that we can move into more traditional financing on the horizon that you see? And either or both, of course.
Yeah, I mean, I think just to answer quickly that question, I'm sure you'll have some comments. You know, usually the capital that's being deployed somehow needs some sort of a guarantee and security, usually it comes in the form of land. One of the creative ways that I've been trying to figure out how to help our farmers get some small loans, so we get $50,000 to $150,000, you can even use a crop as a guarantee. So we can have crop financing, especially through an institution like us that can kind of give the lender the guarantee that, hey, if the farmer defaults on payment, we would give the crop a certain, loan to value price there. That would be another creative way we would actually give up ownership in the land.
You know, and I'll just say for folks who may be listening or who are thinking about trying to solve this problem, the recently passed legislation, SB 94, that combined the medical and adult use legislative frameworks, established a foundation for cannabis cooperative associations. Cooperatives have been one of the most powerful tools for bringing small sector agriculture into the fold without giving up our ownership. And so I'd like to encourage those people, everyone listening, you know, as we work to solve this problem, keep those entities in mind as a potential organizational unit to establish more healthy relationships between the two segments of this emerging marketplace.
Okay, well, thank you very much. Thank you, panelists, for sharing. Thank you, panelists, for sharing with us your insights and knowledge. And thank you, members of the working group, for your questions and observations. This has surely been one of our most rewarding meetings, and now I'd like to invite members of the public to come forward and share with us any comments or information you might have pertaining to public banking. I ask that you restrict your comments today to the topic at hand, public banking. We have come to the point where I will start calling out names. Once again, I ask my staff members to please raise your hand and identify yourselves. A good number of you have filled out the forms, and if you have not, please approach one of my, or raise your hand, and one of my members will approach you, and please fill out the forms. I will call up the speakers in groups of 3. We ask that if your comment has already been covered by another speaker, you help us to use our time efficiently by foregoing repeating the point. But do feel free to come forward and let us know you agree with the previous comment. To keep us all on schedule, I would also ask that you restrict yourselves to no more than 2 minutes. We will be watching the clock. Please do not take it as a rebuke if I ask you to follow the 2-minute rule. And so let's begin. The first 3 are Blair Avery, Miguel Molina, and Justin Hampton. Please join us at the table. Blair?
All right. Well, I'm affiliated.
Thank you, Kevin.
All right. So I'm affiliated with Revolution LA, who recently was a part of the Divest LA campaign and the Public Bank LA campaign. I want to remind you guys that this is not just an economic issue, it is a social issue. Marijuana prohibition began in California when the State Board of Pharmacy declared it a narcotic in 1913. And ever since, for over a century, it's been used as an excuse to kick in the doors of minority communities and poor communities. And with this change, there's going to be a change in a lot of things. Economy. I bring Part of the reason that we have private prisons is because of the marijuana prohibition, and the same banks that fund these private prisons are the banks that crashed our economy as a result of the lending, the lending crisis, and they're the ones that see cannabis industries and cannabis entrepreneurs as a criminal liability. So California's success in legalizing the marijuana is a milestone for progressive values, and with it comes not only the opportunity, but in my opinion, the responsibility to revolutionize the industry and public policy. California has the 6th largest economy in the world, so I think we can afford to give the public bank a shot. And history was always written by the winner. So in America, the winner has sometimes been a racist fraction of the conservative right, and we have this opportunity to use this cannabis that was used as a tool for oppression to be a tool for good. And so if we're going to rewrite history, we better win. Thank you, Blair.
Mr. Treasurer. Thank you for allowing me to say a few words. I just want to make it clear that this past election last year gave a mandate to the state, gave a mandate to all our policymakers, and that was to deal with the commercial recreational use of cannabis. And you had the other mandate, the medical marijuana legislation that passed 15 years ago. But it's this issue here, you have been given orders from the citizens of California to find a solution. This is one of the biggest industries in the state, if not the country. And for myself, as a not just Chicano but Native American, it is a social justice issue that has to be addressed. The war on drugs put my peoples in prison and fueled the industrial prison caucus of California. You have an opportunity here to send a message to the country. I recently saw the governor take a stand against the pulling out of this country of the climate issues in France, of the Paris Accord. I saw a defiant governor take a position also on immigration that defied the federal government's positions. You have an opportunity here to do the same thing. You need to show courage. You need to show some spine and take a position. It might be, or it might appear as defiant, but it's in the tradition of California. If something is wrong and the federal government can't see it, we are the people vote. And you here, as policymakers, are in position to take a stand. We saw, and we have seen what Wall Street and its banks have done. It's destructive policies, not only of climate, but also destructive policies when it comes to taking our money and financing the ongoing endless war around the world. You need to take a position. The citizenry of California has mandated you to do so. Thank you.
Thank you, Kylie.
All right. My request here is just to introduce yourself, please. Okay, my name is Justin Hampton. I'm actually here as a reporter for Weekly. However, this is more a response to the public bank issue that I haven't seen addressed at all. Should you take it on? I didn't really hear anything talked about with regards to individuals who are obviously talking about businesses or whatnot. But I know certainly people who are in the industry, they have problems getting loans as well too, for mortgages or whatnot. Ours is forbidden equity. So I would only hope for if you do go down this road to take private banking, rather be public bank, that it look into, helping, the individuals in the industry, start to create, their own capital, their own, potential to create wealth, because that seems to be forgotten. Obviously, I'm sure you're all thinking very high level, but in the meantime, we need banking too. Those of us who are individuals and employees in the industry. So I just wanted to bring
Thank you, Joseph. Next, we are Joseph McGinley, Mark Armstrong, and Benedict Blake. You're welcome.
Good afternoon. I'm Jim Gilney from San Francisco, California. 20 years ago or so, I got accidentally involved in the banking industry. Just retired a couple of weeks ago, from one of the technology providers. It seems to me what California should do is create a state bank and ring fence it. You guys can use this terrible morning on firewall. Instead of banking, it's legal terms called ring fencing. Just legal. Oh, sure. Yeah, it's a legal term called ring fencing, where you set up basically an entity that's protected from bankruptcy and all these other issues that could be wrong. I've been doing that now for the past 10 years in Silicon Valley, working with some of the corporations up there in terms of setting up their internal banking system where they have the bank inside the corporation. It seems that California can certainly raise a lot of money in terms of deposits from corporations and counties and just the state level alone to create its own bank. And that would really be just very disruptive to Wall Street, and it would certainly bring a lot of attention to us here in California. I really appreciate the work that you're doing. It's great. I am proud to be Californian based on what I've seen here coming out of the Treasurer's office in the past year. That's all I have. Thank you.
My name is Mark Armstrong. I'm from Anonymous USA. And Treasurer Chung, I'd like to respond to your question about B&B's role in DAPL. The story actually begins in 1997 with the Red River flood. That was the second most costliest flood in the United States at that point. And the Bank of North Dakota was brought into Grand Forks to develop a loan program. It ended up being an emergency loan program for counties and cities. And within 2 weeks, they developed that program. They provided a 6-month moratorium to all mortgage holders who had their mortgage with Bank of North Dakota on payments. The same with student loans, a 6-month moratorium. They provided bridge loans to businesses as well as homeowners who were going to be reimbursed by FEMA. FEMA was around at that time, but FEMA was it took 6 to 9 months at least to get reimbursed by them because the work had to be finished and people did not have the money to pay for construction. And there were a number of other things as well that the Bank of North Dakota did, all within this emergency service loan program. And so that program has existed for other, and has been used for other emergencies. And recently, in 2016, it was used by Morton County as well as the state to obtain tens of millions of dollars to militarize the police against the protesters. And the greater point I want to make about this is that the heart of a bank is the loan program. And the loan program reflects the values of the community. We as people are not given an opportunity to influence the loan programs of Wall Street banks. With a public bank, we are given an opportunity, and to Bank of North Dakota's credit, last year they had over 40 meetings throughout the city, throughout the state of North Dakota, asking how to spend their infrastructure credit to fund new infrastructure projects. It's that kind of democratic approach to banking, which is what we're asking for. Thank you. Thank you.
Welcome back. Thank you very much for holding this. I remember, I think a lot of people, Mr. State Treasurer asked me to do this. I was one of them back in November at the California Hispanic Chamber of Commerce. A lot of great information has been gathered in the last 6 days, or six days of holding this event. Recover the capitalization that would cost $2 billion today, but no one has mentioned the interest and fees that a state or a county or municipal size of Oceanside saves $8 million in interest and fees. Oakland, which I'm on that team, Compliance is part of our group. Oakland spends $52 million in interest and fees. I would speculate the state would spend over $200 million, if not more. But public bank, we're getting momentum. But what I propose this time is ask the state treasurer to hold a feasibility study. It's time to roll up our sleeves. But beyond the feasibility study of not only public banking, but all the banking options that we have in front of us. We need to roll up our sleeves. We need to move entrepreneurial light speed. We have something in front of us called January 1st. I wouldn't want the heavy responsibility of this for the Ajax has in front of us. But we all love you, and I'd love to be your enforcer because I'm a big 800-pound gorilla. Okay. But on the other end, let's just keep on moving this action. What's really, back to the feasibility study, the legal opinion. Javier Barcera is going to lead that charge. Let's give it to the federal government. Let's develop a public bank. Let's develop all these options. Thank you.
Next three are Sahar Ayeni Asazian, Daniel Dvorsky, and John Hervai.
I'm Jennifer Fine. I come from a very unique background. For many years, I did online child protection, and it was funded by the adult entertainment industry. We received lots of awards around our child protection. But one of the things I see happening here is exactly what happened and still continues to happen with the adult entertainment industry. And it's a legal business. But you go to banks to try to get a loan, you try to get a bank account, and if you're involved in that high-risk industry, it's very difficult. So whatever you do, you really have to take a look at, we're talking about the big guys and the small guys, that everybody has access to banking. Even running a child protection association with having a balance of like $200,000 in the bank, getting lots of awards from the state of California. I had Bank of America try to cancel our account because of where the funding was coming from. So really, when you take a look at it, you have a much larger picture to have to look at, and please take a look at that and know that it's a lot of small people and perception. And somebody had brought up about perception. The perception of the industry is that it's illegal, and you're not going to change that. Don't entertain the industry, legal, and you could not really get past that, even though it was legal and been going on for years, and very much based in Los Angeles and Southern California. So thank you.
Thank you for the help on the plane, by the way.
You're welcome.
My name is Sahar Nazazian, and I'm an associate with Vicente Cedarberg, a law firm that represents all facets of the legal cannabis industry in multiple states throughout the United States. On behalf of Vicente Cedarberg, I'd like to first thank Treasurer Chung as well as the members of the working group for your efforts to find a solution to the banking issue in the cannabis industry. Although Vicente Cedarberg's client types vary, the need for financial services is a constant amongst them. While few of them are fortunate enough to be able to secure a bank account or an account with a credit union, the majority of them continue to desperately seek a way to reduce their cash reliance and the inconveniences and public safety dangers that accompany the vast amounts of cash in this industry. During its February gathering, this group heard from the Director of Washington's Liquor and Cannabis Board, Rick Garza, about Washington State's success in banking its cannabis industry. As Director Garza's presentation illustrated, community banks and local credit unions are the key to banking the cannabis industry. In the interim between establishing a public bank educate them on how to service cannabis businesses and the benefits of doing so. It's really through the continued encouragement of this group's members that California's cannabis industry can access banking and really proliferate public safety by reducing its cash transactions.
Thank you.
Hello, my name is Daniel Gorski. I'm an entrepreneur outside of this industry, but I made a decision a few years ago to 110% get involved because at this time in my life, and I believe I represent the feelings of many people here, we thank you very much that these are the heroes. These are the people that are now invested, taking a stand, and if you will, come out of the closet. We're not creating new users. We're merely legitimizing those that are out there. We have a situation that's perpetuating itself in a negative direction. You have landowners, as stated before, with the ability to charge 3 to 5 times the market rate simply because they own a building that fits the zoning in a city that supports an ordinance. You have construction people able to manipulate the same situation. And you have an environment with city councilmen and mayors. It's just a bad situation. So we have to push forward. And we have to recognize that as a democratic nation, our policies and our institutions should reflect the will and the actions of the people. Thank you.
Next we are Helen Brown, Ryan Backus, and Matthew Wilson.
Hi, I'm Alan Brown, chairman of the Public Banking Institute.
Mike. I'll let you guys press the button.
I'm Alan Brown, chairman of the Public Banking Institute. Thank you so much for holding this panel. I think it's great that you're charging ahead with this idea. I wanted to, for one thing, respond to the man who talked about the Massachusetts Commission. I wrote a rebuttal to that, and Demos wrote an excellent rebuttal, which I can submit to your panel here. He said that there was a man on the commission, excuse me, named Chuck Grigsby, who is so convinced. I mean, he was convinced that the panel was wrong, and now he has brought a bill for Massachusetts Public Infrastructure Bank. It would be a depository bank, so it's this model similar to here. So I could also send you that bill if you're interested. It's a very well written bill, and I think it might be instructive. So anyway, not everybody, even on that commission, agreed, and we thought it was a bad decision. Anyway, and also I wanted to support Miguel, who said that this is a states' rights issue. I mean, we are the 6th largest economy in the world, and the United States itself is a very large country with people with very different values, and so we have our own values. We should be able to do the will of the California people, which we all know is quite different from people in the South, people on the East Coast, etc. It seems to me that you could make the argument legally, I'm not a lawyer, it seems to me you could say that the reason the federal government has jurisdiction is because of the Interstate Commerce Clause, and there are blockchain systems that, they're going called Services Inc., which they can, for 1% of the transaction, they can make sure that you comply with everything in the whole memo. I mean, so it's all automatic, you don't have to deal with it. So it's basically the charge of a credit card. And they can ensure that that money does not go out of state. I mean, the card just doesn't work out of state. So there are ways to keep all that commerce local so that you're not actually in violation of the Interstate Commerce Clause. Plus, we have the full memo, so you can say, well, we comply. We think we're legal. I mean, I think it's that you could win those lawsuits. Thank you very much.
Good afternoon, everybody. I'm Ryan Backus, interim CEO of the California Cannabis Coalition. As you know, we were helping you guys upstate the state assembly for AB 266, Senate Bill 643, and Assembly Bills 243. Last year, I managed direct democracy to put all on the ballot. I actually have been working very immensely with not only local cities down here in Los Angeles City, as well as directly Los Angeles City, Beverly Hills City, Redondo Beach City, very many of the big LA area cities that especially they're concerned, of course, is the banking. And I will say that, especially your panel, the two gentlemen who were here earlier, one thing that was commonly grounded was that it has to be a move by Congress. But I will say that there isn't anything that's stopping us from making a push on Congress. And there have been, as you see in the recent days, more and more pushes in Congress than there have been in years, especially back to when Bernie Sanders introduced the bill to the Senate. So right now, especially even with the fundamental understanding that Jeff Sessions, especially, he is in absolutely the wrong. You even heard a young gentleman, especially the lobbying from Wall Street, the SE's commission, you know. There are so many facets that take this underhandedness and we could put our underhandedness back and push. And what I'm saying is we work not only together with our local governments, with our state governments, with our state boards, of course, with Gloria Ajax being here from Washington. We're very happy to have you here. I will say that we can work together with the other states. And what we can put together is a plan where we push back on DC together. We're not going to be able to do this just as a state on our own. We are a very big state, a very great state. But we need to work together with the other states that are making these proclamations and are moving forward just in the way that they are and just in the way that we are. Because the things that they're coming to are the same things we're coming to right now, and that is we have a problem with the banking. They're going to have the same problem. We might as well infrastructure some way where we can all work together and take it up. Thank you. Have a nice one, guys. Thank you.
Hello everybody, my name is Matt Wilson. I'm an entrepreneur. Started a company called Pink Flowers 6 months ago. Just want to say to everybody right here that I'm in front of, it's really awesome just to see the times are changing. Even though I'm only 31, still the last 10 years or even 4 years, you couldn't talk about cannabis so open. And as we see that the information around cannabis is moving at a rapid rate and the laws aren't as keeping up as much with the information. There's so much around this plant that has so many positive effects. Now, I've been in the gray area for the last 6 years, and if you guys know what that is, then you're in the gray area, and if you're not, then you're not, and you don't know what that is. But the thing is, I work with a lot of farmers in Northern California that just are living up in the woods that grow this plant because they love it and they want to get it to patients and people, and then that's where we come in and we try to get the right farmers to meet the right vendors to get medicine grown the right way to the right people. And I know we're all here to talk about banks and money, but the taproot of the situation is cannabis. And as soon as we start figuring out maybe these banking situations, then we can go into the next stages, of course, with the regulating of test results, such in Colorado where it is legal, but still there have a lot of problems with the testing, stuff coming up forged. I just being where I am now, trying to wait for the right licensing to get for a micro business or for being a distributor. It's just I'm waiting. So after coming here today, it gives me nothing but a lot more positive outlooks on the future of this. And thank you guys for being on the forefront of the fight, because all of us are going to be standing behind you guys. So thank you very much.
Next we have Irene Montantes, Michelle Milner, and Michelle Davis. Irene?
Good afternoon. My name is Irene Montantes. Thank you for giving me an opportunity to speak. I'm a Community Outreach Director for Revolution LA, Divest LA, a grassroots movement that won a victory with Los Angeles City that unanimously voted 14-0 to divest $40 million in holdings from Wells Fargo. The city is now looking into debundling over 800 accounts with Wells Fargo in the near future. This will hopefully allow for movements of funds into community banks. We are now in phase 2 of divestment. 7 council members recently introduced a motion to create a state charter bank of Los Angeles. Now the thousands of people who stood behind the divestment is standing behind the campaign recently launched, Public Bank LA. A municipal bank campaign that will keep banking profits working for our communities and use our funds to reinvest in renewable energy and social goods. I'm here representing the people who stand behind starting a public bank. to reinvest and help our communities. We will continue pressure here in Los Angeles. The people are increasingly determined to chart their own course independent of Wall Street and, where necessary, independent of the federal government. There has never been a better time for active citizens to push back Wall Street lobbyists and implement a financial policy we already know can work, as the experience with public banking in North Dakota and other countries demonstrates. Thank you.
Hello, I'm Michelle Milner. I live in Los Angeles. I've also been working on the divestment campaign, following the lead of our state treasurer with holding Wells Fargo accountable. I come to this as a mother. Common sense tells me banks make money, right? We can make money as a state to put it back into the infrastructure that we so badly need, the renewable energy that we need to develop to basically keep this planet livable for the next generations, in addition to the terrible affordable housing crisis that we have in Los Angeles and all throughout the state. We might not have heard the exact solutions in this room today. In fact, we heard a lot of barriers to what we would like to accomplish. But I do believe that if we put our heads together, we get the brightest people who have been thinking about these issues for so many years. We have a perfect storm now. We need to put the billions of dollars that are coming from the cannabis industry somewhere. We have a banking crisis where we don't like what Wall Street is doing to the people. And we have so many needs in this state. We have to get out of the extractive economy that the banking industry is. There are trillions of dollars in offshore tax havens. We need to put that money back into our economy for the people, for all of our children. So again, I'm a concerned mom. I would like all of you to stand up and do your best, because this is a turning point. It won't come again in our lifetimes. We need to act now. Thank you.
Hi, my name is Rochelle Davis. I'm an insurance broker. And I'm just listening to everyone here today. First, I want to say thank you to the panel, to everyone here. My biggest concern is the trickle-down effect that happens as it relates to the safety of the communities and the business owners. The reality is we are in the cannabis industry. That's what we're talking about. We're talking about the cash that's being handled by distributors, by growers, by everyone who's involved. We know what happens when they try to make a move to make those legalities happen for their businesses. What about the risk? What about people being robbed? What about people getting killed? They're having this lump sum of cash walking around with them. They're in this industry and this business. They are getting back. They pay taxes. They do everything else that a business has to do. Thinking about it from that perspective, I understand that, like she said, the conversation, heard a lot of barriers. Safety needs to be at the forefront of that conversation, because business owners, our communities are going to get affected by what's going to happen and what's already happening now. I also understand that there's a lack of education. I recently sat with LA County at one of the regulation meetings for the community and discovered that there's there's a very, very small understanding of what cannabis actually is, especially in our communities. So they're concerned about the safety, and seeing that that safety concern is as a result of the lack of education as to what's really happening with cannabis as a whole, that poses a threat for me. I'm a mother. I have a 22-year-old son. I have a 3-year-old daughter. I have cousins. I'm just like everyone else in this room. So proper education, I think, is something that needs to be addressed as it relates to safety, as well as an insurance broker servicing people who are in the industry, trying to get them proper protection. They don't have access to banking. So we have to walk around in turn with the cash to make those deposits for them, which is silly. It's very silly for us to have to do that, but we're talking proper protection. There's certain things that fall under that category as business owners don't know. The openness of some small business owners' conversation and fear to talk to us because they're afraid. So thank you very much.
Thank you very much. Next in the queue, we have True Chihuahua, Orin Open Aldo, and Ciro
true. I'm here representing Revolution LA, Divest LA, and Public Bank LA. We are here to support the banking system that would become the trusted actor, as was mentioned by Mr. Foden initially. A trusted actor would require a socially responsible banking charter that supports the needs of our communities and our planet. I'm here representing the activist community in Los Angeles and the partnership that we can build both with our policymakers and industry professionals to create a financial system that provides the utilities that we need in regards to the cannabis industry, as well as small businesses, low interest and student loans, low interest loans for student and home loans, sustainable energy investments, and ethical lending and investment practices. We at Public Bank LA look to support and assist however we can in creating the socially responsible charter that respects the needs of the people and an investment ordinance that creates a policy to reflect our values as a progressive city and state.
Hello, I'm Maria Benaldo. First of all, I'm going to thank you for being here because you're very important in my life, and I'm going to tell you why. I was a dedicated, hardworking teacher for 50 years. I was a workaholic. I loved to work sometimes 15 hours a day. I was a mentor teacher. I lived in my house for 65 years. Wells Fargo put 2 or 3 insurances on my house and wouldn't answer my response. And that's why I'm for what we call public banks, because I saw what Wells Fargo did in my whole community, especially going after senior citizens. I'm homeless because I'm going to continue to fight here because my whole family, my 19 grandchildren everywhere, live in Bakersfield, live in Emmett, live in Ecuador. And I told them I have to stay here in Los Angeles to make sure we get rid of Wall Street banks that have done this to a lot of people in my community. And I hope we have public banks because all the research that I've done, it's better than Wall Street banks. Thank you.
Hello, everybody. My name is Cyril Belza. I wanted to thank the working group and chairman for having this meeting for all of us to be able to voice our opinions. I'm coming from probably a very different place than most people. I'm a cannabis cultivator, and I've had to deal firsthand with how it is to deal with these things here. You know, I've been on the streets trying to, get my product moved in the area, and it's really scary. And there's a law saying I can't own a gun since I'm a cannabis patient. So I can't even protect myself, too. Another thing is, people in this industry are kind of, die hard, stab me in the back, I don't really care, I just want to make money. So they don't care about me as this person with a skill set, this person with, ability that most people can't, because I've been told I'm in the 10% top echelon of growers here in California. But I'm not treated that way, because there's no stability, there's no organization, there's no structure to our industry. Now, if you look at it, a bank backing everything and allowing individuals like me to say, look, enough of this abuse, I'm going to go do it on my own, offers us to create this economy we really need, because now I can hire people. Now I can go and start paying bills, providing to the local economy, which is what we really need, because a lot of money is leaving our country, leaving our cities. There's statistics that in the black community, $1 doesn't sit in the black community for more than 23 minutes or 30 minutes, which is the truth and reality of our world. And so, as a cannabis cultivator, a patient, and a California citizen, I'm behind the public bank because, for one, it will allow people to really step out into the open and do the right thing for everyone, not just themselves. And it will also allow us to change the way the world is governed and run, which right now, we all know in our hearts, things are bad and they're wrong. And this isn't the way it should be. But quite frankly, unless we're going to do something and put our feet down together and say, look, enough is enough, we're not going to do this anymore, it has to change, we're unfortunately all going to be dying poor, broke, and taken advantage of, no matter how you look at it and how well you think you're taken care of. Because at the end of the day, our planet is dying, and our kids are going to have nothing. And we're continuing on the cycle that is detrimental
extremely important that we're talking about banking. I think we're at an extremely critical point in our history. It's not only as in California, but also as the entire United States. Los Angeles is one of the biggest economies, not only in the United States, but globally. And I believe that right now we're in the decision to make the correct choice, which is the ethical solution. And speaking with neighborhood councils and speaking to the city councilmen, I believe that every one of us really do want to make the ethical solution, because the interests of Wall Street bankers do not represent the majority of the people. I don't believe that Wall Street bankers you can't even relate to the Wall Street bankers, because what they're doing with their predatory loan practices and funding disastrous pipelines and not putting the money towards things for the welfare of the people on the planet, we're the ones that are having to deal with the effects. I can't even think about owning a home because it almost seems like an impossible task living in LA, and I've grown up here in my entire life. I've had numerous families of friends who's had their homes taken away with really no way of getting them back. And one moment here. And I believe right now we can't give the power to the hands of the people. I urge you to do the right thing. I believe that we all are here to do the right thing, and I really can't thank you enough for letting this conversation take place, because we have over 38,000 people who signed the divestment motion to happen in Los Angeles that got unanimously passed by City Council. And we're all watching, we're all aware, we all know what is going on with Wall Street. It's not like 20, 30 years ago when things were running amok and people weren't completely understanding the effects that these things were happening, that these practices were doing to the communities. But instead of funding $200 million banker salaries, it's time to put just that salary or just the $100 million that we pay as an annual fee into green energy systems, into better schools, into better roads, and into just the welfare of us, every one of us here sitting in this room today. Thank you so much.
Hello, Shelley Browning with Prince of Public Banking, Santa Rosa. I'd like to start by thanking Ellen Brown, who just spoke. She is the one who wrote the public bank solution and brought this solution to us. Without her, none of us would get this table. I'd like to thank who co-founded with Ellen Brown the Public Banking Institute in 2011. We have been in a nationwide public banking movement for the past 6 years. I have to pay homage to the marijuana plan also for bringing us to this table. I'd like to thank you, State Treasurer Tom, for allowing this conversation to happen on public banking. We wouldn't be here. We have been knocking on the door of the state. We've been knocking on the door of towns and cities across the state, trying to get the message of public banking out. So here we are at the table because of a plan. Let us honor that plan. That I plan it fascinating. It's the second largest industry next to Wi-Fi. This is a plan that is healing us on many levels clearly. And perhaps, it just occurred to me sitting here, perhaps now it is this plant who is talking to us as a species to look at truly saving ourselves as a species. We're literally at a precipice right now. North Dakota, I have to honor the people of Standing Rock who brought forth the divest movement. We're now in an emerging point between the divest movement and the public banking movement. We see this as a natural marriage because if towns and cities are going to, and states, going to look at divesting from the Wall Street banks that are funding the fossil fuel industry, that is unraveling the health and well-being of this planet and the human species, not to mention all the other species that are being impacted by the way we're raping our planet, literally, forgive me for using that word. We can turn it all around right now. You know, one of the slogans that came from the Occupy movement is that all roads lead to Wall Street.
We need to start building roads back to Main Street in a healthy manner. Thank you very much.
Anyone else? Okay, then I want to thank every one of you for coming today and sharing your points of view and your valuable experience and expertise. We have been doing the important work, as I stated earlier, for the past 8 months. We have been exploring how we, the public, legislators, regulators, tax collectors, cannabis-related businesses, and bankers can meet the challenges facing the financial services industry in California, while also meeting the expectation of Californians who voted overwhelmingly this past November to legalize commercialization of adult recreational use of cannabis. The Cannabis Banking Working Group has been taking a long, hard look at how we ensure safety and secure systems for processing the currency we anticipate the cannabis industry will generate. It is not acceptable to ask these businesses to go on operating on a cash-only basis when to do so has placed them and their employees and the public in harm's way time and again. We have heard stories about business owners of medical marijuana dispensaries carrying duffel bags of cash through seedy neighborhoods just to pay taxes. We know of a dispensary owner tortured by criminals looking to steal cash who is unable to safely bank. And there are many, many reports like these. We all agree the best and most effective step would be for the federal government to remove cannabis from the list of Schedule I drugs that includes heroin. This single act would free banks to accept deposits from cannabis businesses they now avoid like the plague because they fear the federal government might shut them down. But such federal action, as stated earlier, appears unlikely. As we prepare our report on these town hall-style meetings we have been holding, I want to strongly recommend that we keep in mind 5 guidelines that may help us define our outcomes. First, we should be guided by the idea of ubiquity. This means the concept should be usable, accessible, predictable, and applicable to the fullest range of cases within the cannabis industry. Second, an ideal outcome will be efficient. It will promote competition, be scalable, and also prove compatible with both the state's regulatory framework and the needs of the banking, payment, and financial services industry. Third, we should be guided by the inclusion of risk management and security controls. There needs to be a clear system for handling deposited payments. Fourth, we must be consistent with federal guidance, offering appropriate consumer protections, as well as protection of the intellectual property rights of those who develop them. Finally, there must be clear directions given on how and who governs and solutions or groups of solutions that may be offered. This is it for me. Now I'd like to hear from our working group members.
So just one of the things that's become more and more apparent over the past 8 months is that the solution to cannabis banking is not an either-or proposition. It's not, do we have a public bank or do we reform federal law? And it seems to me pretty clear that we've got to do both. And so for those of you who are in the room who support public banking, you should support the reform of the BSA so that we've got that safe harbor provision in there for cannabis. That is the one thing that is going to make it workable for us to pursue a public banking solution. And I think, a public bank, there's a lot of, obviously, passion in the room around that, and there are a lot of good reasons why we want to have that. But for cannabis banking, it's not going to work without federal reform first. And so, short of having cannabis descheduled, I think we really need to pursue that safe harbor provision to make sure that the BSA carves out legal cannabis businesses.
Thank you. Any other comments? Okay. When we next meet, it will be in Sacramento for the purpose of publicly reviewing our report. We are adjourned, and thank you again.